Good morning, everybody. Welcome back to another episode of The Market Open. It is Wednesday, August 21st, 8:45 a.m., and we are here live on The Market Open. Shout out to Cindy. Got a great comment from her as we start up the stream. Good morning, everyone. Happily married 31 years today. There's hope for you all. Let's buy some stocks. I love it. Happy anniversary, Cindy, and to your husband of 31 years. It's a long time, dude. That is not bad. My parents celebrated their 25 years back in 2018. And in India, 25 years is like a really big deal. So you have to have like a celebration and a big event for that. So 31 years, that's big. Shout out to you and good morning to everyone being here. I woke up this morning and I walked outside to take a walk. Now, yesterday I did the same thing. And I was wearing shorts and a t-shirt yesterday because I felt like it was not a big deal. Actually, it was after the market open. So I didn't talk about this yesterday on the market open. And it was cold, dude. It was 65 degrees. Now, I know some people that like live in Alaska and stuff are laughing at me when I say it's 65 degrees, but it was 65 degrees. It was cold. Today, I woke up in the morning, got outside, and it was even colder. I think it was like 62 degrees. I don't like this, that summer has basically ended, and we are now here in a world where, I mean, look, I love September to December, so that's my favorite time of the year. Like, so I can't really complain too much about the weather, but it really shocked me yesterday. Like, it was the first day in over 2 months where I got hit with the cold wind. And so now we're back into the cold. It's a reminder that summer is ending August 21st, 10 days away from September beginning. And it's time to officially get into the latter half of the year. 2024 is about to end, and hopefully we can just protect our gains that we had all in 2024, which is going to be very important. Today was a big day already in the earnings markets, and that we're going to see at 10 a.m. So what's the big news for today? At 10 a.m., we are going to see the BLS job revision data. So at 10 a.m., the market's either going to go up or either going to go down. I'll talk about my predictions, what I think is going to happen. But as we end the month of August, we're going to get a massive revision on that data. JP Morgan, Goldman Sachs expect it to be upwards of 500,000 to 600,000 jobs, down from what we had, meaning we lost about 50,000 jobs a month, didn't add 50,000 jobs a month over the past 12 months, which would be about 600,000. So that can negatively affect the markets. So that's one thing we got to look at 10 a.m. Number two, Target. Crushed earnings, absolutely crushed earnings. I mean, it was even a shock to me. I did not expect Target to crush the way they did. Not only did they beat EPS, not only did they beat revenue, they raised guidance, and the CEO, and we'll watch him in a second, went on CNBC and said the consumer is fine. Now, probably the consumer's fine because they lowered prices on 5,000 items after price gouging on all those same items. He didn't admit to the price gouging part, but lowering those items last quarter really helped with their same-store sales. And that dramatically helped with the earnings. So for everyone saying, oh, well, Walmart crushed it because Walmart is the place you go if you're poor. Well, Target, I mean, I never fully understood that argument. I understand Walmart is more like price conscious people. I don't think like you have to be poor to go to Walmart. But Target is a little bit more expensive than Walmart. And Target showing decent results shows that if you think the consumer is weakening, you've got to build a thesis for why they're weakening at Walmart and why they're weakening at Target. And it's not that easy to make that type of thesis, along with a couple of other factors and other CEOs telling us that, hey, the consumer is not in that bad of a position. I think the jury's still ruled out on if the consumer is, horrible. I still think we need more data, but Target and Walmart is at least some data to let us know, along with Costco, that maybe the consumer isn't in the worst situation. Now, Macy's is down 8%. Target, by the way, is up 13%. Macy's is down 8%, but Macy's is, Macy's brand is Macy's brand. I think Macy's has a problem with competing with e-commerce and things of that nature, but overall Target is up. And then also we're going to talk about Palantir. So Palantir insiders have finally sold. I was waiting for this day to happen. This has not happened for the past really 4 months since Q1 earnings, and it officially happened yesterday. We're going to talk about what the insiders sold, why they sold, and how that really didn't have an impact on the stock yesterday after they ended up selling. So we have a lot to talk about, and 10 a.m. is going to be the most important hour of the show, or minute of the show, because we're going to see how this stuff plays out. Benny says, at what point can we admit that the company's blaming the consumer for bad earnings is just the company not doing well and losing market share? I think we're getting pretty close to making that realization. It feels very likely that Disney blaming the consumer is Disney's fault, not the consumer's fault. Also, Lowe's yesterday, right? They didn't blame the consumer. They said, hey, here's some issues going on, but we're not saying the consumer's bad. So a lot of companies are also realizing we really can't get away with this excuse. You know, when Russia invaded Ukraine, you could get away with that excuse because that was such a big geopolitical event. The consumer weakening on the backs of rate cuts and jobs still being open, even though unemployment is going up. hard necessarily to make that argument. All right, so let's start off with Palantir, and then we'll get into a ton of macro stuff that we have to get into. Nothing too crazy on Palantir other than the fact that, yes, insiders have officially sold. This is the first time they've sold in about 4 months in a real way, so I'll pull this up right now. My thoughts on it, I think it was probably due to happen. We haven't seen an insider sell, again, in a while to the magnitude that we're seeing right now. And you can't blame them, dude. The stock is up a lot, and because the stock is up this much, I would imagine they're thinking, hey, maybe we should take some profit. So here are all the sells. Let me pull it up right here for what the insiders did. So this is the first one. We have Shyam Sankar, sold about 225,000 shares. So there's one of them. Then we have David Glazer, CFO. Shyam Sankar was the CTO, sold about 118,000 shares. Then we have Karp, sold 585,000 shares. If you know Karp sells, this 585 is all scheduled. I don't know if these were all scheduled. I think they were scheduled, but this 585 number is scheduled because that's like a routine number that he sells. So about $18.8 million. All of them sold in the 31 high range, like 31.90 to 32. So they all kind of got the top, if you believe that that was the top for now. Then you had Stephen Cohen, one of the co-founders of Palantir, selling 405,000 shares. Then you had Ryan Taylor, CRO, Chief Revenue Officer, selling 118,000 shares. And then finally, you have Ryan Taylor selling 160,000 shares. And again, there you go at $32. That's the price. Now, look at what he's now. So this is a little bit of the nuance of this. A lot of them got restricted stock options. So Ryan Taylor is acquiring 160,000 shares at $4.72. Those are his options. And then he's selling them at $32. So he's basically making a 7x on that buy and sell. But the reason he's able to get it at $4.72 is because he has RSUs and he has options that vest over time that allow him to get this stock at a much cheaper price. So the insiders selling is a still very small percentage of their overall portfolio. Karp still has, I think, like 48 million shares of Palantir. Peter Thiel has about 120 million. So this is a routine sell. This is a sell that was bound to happen. We have not seen selling again since about April or May, and that selling was very minimal. And that's because I think they thought Q1, the stock would react way better than it did. The stock fell 20%. So I think they all waited until the stock would go up 20%. And we've seen the stock has done very well. Now, all of the selling, call it, a couple million shares yesterday, really didn't impact the stock. I'm assuming they sold at around like 12 p.m., 1 p.m. when the stock was nearing its intraday highs. Palantir is still 32.25 in the pre-markets. It didn't even flinch from 32. So to me, what this tells me is that insider selling means there's so much liquidity from the broader market that's giving them the ability to sell. And the broader market doesn't really care that insiders are selling. We don't really see the stock negatively reacting to that news. And I think everyone kind of recognizes, okay, it's been a long time. They probably do have to sell a little bit. Doug says those insiders got to sell their bag before they have to pay taxes on those unrealized gains. We will talk about that. I forgot to mention that in the morning. Yeah, we had a new policy proposal last night. Talked about it on the market close. We'll go deeper on it today. Definitely not the most exciting proposal by Kamala Harris if you don't like your unrealized gains not being taxed. But in general, that is what we had in the context of Palantir. One final thing I'll show is Lowe's called out Palantir yesterday. So Microsoft called them out 3 weeks ago and said, hey, Palantir is a leader in their industry. And then you get a big Microsoft deal. We know Lowe's has been working with Palantir for a long time. Lowe's says in their earnings call, we are working with leading platforms like OpenAI, NVDA, and Palantir Tech to deliver AI solutions to our customers and to ourselves to improve how we sell, work, shop, and work. So Palantir, OpenAI, and NVIDIA in the same sentence. Really not bad to hear that from the Lowe's CEO. Again, Lowe's had a great quarter outside of missing a couple of numbers due to a slowdown in the housing market. But overall, not bad at all. So getting a mention from Microsoft and Lowe's in these earnings calls is really important because those companies want to say, hey, we are a leader in AI and we're working with leaders in AI to operationalize our business, whether it's in the government with Microsoft or in retail sales with Lowe's. And it seems like more and more companies are highlighting the use cases of Palantir as their core value proposition. Again, this is stuff we want to see. This is stuff we need to see. And this is stuff that the street really cares about seeing if they're going to keep this multiple and justify the multiple expansion over the next year. So very, very important stuff for Palantir. Big news is that the insider sold. Not really that important because we were expecting them to sell. They haven't sold in a while. And given the stock's up almost 100%, you would imagine insiders take some profits. Okay, let's talk about Target. Let's move on to some macro stuff and talk about Target. I saw this earnings this morning. I really did not expect it. I was expecting like a I was just expecting it to be okay. I wasn't expecting it to be the way they've done it. But I think this really invigorated the market this morning based on what we saw. So let's take a look at these top line numbers. Then we'll hear from the CEO. EPS up 42% year over year, beat expectations of 219 and beat their guidance of 195. So either they guided really low or the street just really did not expect them to put up these numbers. But they ended up putting some amazing earnings per share. Revenue, $25 billion. That's up 2% year over year. Beat estimates. Comp sales up 2%. Estimates were 1%. Raised full year 2025 guidance. EPS to $9.70 versus from $9.28. Comparable sales up from 0 to 2% growth, which is nice. Or like in the middle of 0 to 2% growth, which is better than what the street was expecting of 0% or the guidance they gave of 0%. So they'll probably come in at like maybe 1 or 1.5. Q3 outlook, 210 to 240 on EPS. That's better than 224. And comparable sales, again, 0 to 2% versus 1.91%. Other metrics, net income up 43% year over year, 1.19 billion. Operating income, 1.64 billion. Why? Because their operating income margins went up to 6.4%. Now, this is not technology where your operating income margin like Palantir can get closer to 40%. This is retail, which is very, very competitive. So even getting a 6% margin matters. Amazon barely has a 5.3% margin on their retail business. Their overall operating income margin is 9.9%, which is lower than the 10.1%. 2 quarters ago, which is why the street, I think, was upset last quarter. But that's up from 4.8% year over year. So they increased the operating margin, which is really the most important metric for a retail business, by almost 2%. I mean, that's incredible, dude. That's like actually incredible. You don't expect them to do stuff like that. And the reason they did it is because of this right here. They grew top line sales digitally in comparable sales and then for overall customer transactions. So this was a quarter from Lowe's that I think just blew it out of the park. Or not Lowe's, Target. Lowe's was good yesterday as well. And I don't think the street expected it, which is why the entire market, including the S&P, got a little bit of a when they reported their numbers. Let's hear from the CEO on the state of the consumer, because I thought what he had to say was really interesting and why the consumer actually isn't as bad of a situation as some people have thought.
So we're looking at a consumer that's been facing some pressure from what we've heard in a lot of other sectors, from a lot of other stores, from a lot of other companies. What do you see with the consumer right now?
Well, the three of us have talked about it quite a bit over the last couple of years. We continue to see an incredibly resilient consumer. Now, they've been facing the pressure of inflation and rising interest rates. They're continuing to look for value, but we've seen a pretty steady consumer environment. I think part of it is we still have a very strong labor market, but a consumer who's managing their budget carefully. They're looking for value, and we're delivering value right now.
We have seen some cracks around.
So right there, again, I mean, clear as day, he's saying the consumer is fine and we're getting value. And again, it's not just him saying it to say it. The numbers are proving it. If the consumer was bad, they would not put up the numbers that they're putting up. There's no gimmicks around those numbers. The only gimmick you can say is that they lowered prices, but that's good. That helps inflation go down. That's what the Fed wants to see. The Fed wants to see companies not engaging in price gouging. So I ultimately think it's hard for the bears to swallow this pill. The jobs data, we'll talk about that. That might not be pretty, but if the consumer is okay and the labor market is not as weak as we thought, then maybe the broader economy is going to be okay as well.
The edges in some places, whether that's consumer concerns. The Fed survey earlier this week that showed that there were concerns about whether they'd still be employed down the road. Other places where it looks like maybe the jobs number is going to be revised pretty heavily, and we're expecting that number at 10 a.m. What do you see? What can you tell us about whether those concerns are something we should worry about?
Well, I think the consumer today is going to continue to look for value. Over the balance of this year, I think they're going to be seeking value for everyday essentials if they shop for food and beverage. But as they start to get back into discretionary spending, they're looking for value. I mean, for us to be up 3% in apparel and starting to see some green shoots in other parts of our home and hardlines category tells us consumers are still shopping, but they're on a budget. They're looking for value, and we deliver great quality and value. They're shopping at Target.
Have you boosted any of your profits?
So then, then Joe asks him, hey, have you done any price gouging? And he doesn't admit to it, which, I mean, probably good CEO training. He doesn't admit to price gouging, but he ends up talking about how the retail market is very, very competitive. And that's why they raised prices, because their margins suffered when they had massive inflation. And again, this is why inflation is really bad, because if you're Target and you can barely inch out a 4 to 5% margin, it's not Facebook that gets 50%, it's Target that gets maybe 5%. And then your raw goods and commodities and prices go up. you've got to charge more to the consumer. And that created the effect that allowed interest rates to be raised, the highest they've been in 40 years, back in 2023. And now we're seeing that start to go away. He also talks about cutting prices on the 5,000 most items that people buy. So toilet papers, milk, all that stuff, which was very important because you need the consumer to have relief and not have to pay exaggerated prices for that. But the good thing about capitalism is that, hey, if the consumer doesn't feel like paying that, they'll go to Walmart or they'll go to Costco. They'll go somewhere else because that's what we have in a competitive economy. If your good or service is just not good enough, people will leave. And that's like the beauty of capitalism. Speaking of capitalism, let's get into another topic that some people are calling the death of capitalism, which is what Kamala Harris said yesterday. So we talked about 2 days ago, her corporate tax rate that she has proposed, which is 28%. This was a discussion we had yesterday, and I talked about the bull and bear case of this. So we weren't just saying this is bad. We were talking about why this might be necessary. To recap that real quick, the reason it's bad is because companies will just raise their prices. That'll cause more inflation. That'll hurt shareholder value, which we care about in this chat. The broad majority of America that does not know what the word shareholder means, they don't care about that. And I think you just have to keep that in your mind when you're thinking about these policies. The bull case of this was if AI automates everything, then you're going to have to get the money from somewhere if people don't have their job. So those are two perspectives on this tax rate. Yesterday, she comes out and she affirms the Biden tax proposal in 2025, or the fiscal year budget proposal in 2025 that Biden laid out, which was that he would put a 25% minimum tax, wealth tax is what he called it. This was the exact proposal. And it would also tax unrealized capital gains. Reading specifically, applicable only to taxpayers with a wealth greater than 100 million, the proposal would impose a minimum tax equal to 25% of a taxpayer's taxable income and unrealized capital gains less the sum of their regular tax. If you are part of the financial universe on Twitter or the technology universe on Twitter, which I would say if Twitter's 500 million people, I would say finance and tech is probably 10 to 15 million. There's a lot of parts of Twitter that are even greater, than that number. There's like music Twitter, sports Twitter, all that. I think sports Twitter is probably the biggest, but at least the 10 to 15 million people that are part of finance and tech Twitter, they could not, the memes on this were insane. Like the jokes on this, because everyone knows if you have any level of wealth in equities or assets, crypto, real estate, paying unrealized capital gains is tough. Now, yes, this only applies to people who are worth $100 million. So a lot of people are like, well, why are you freaking out? It's only people who are, worth a lot of money. If you're worth less than 100 million, which most people are, then it doesn't apply to you. It's not about that. I think there's three arguments that are real here. The first one is it is about the philosophy of American innovation and ultimately capitalism, right? Do we believe that people have a right to take risks in society, get rewarded for those risks, pay taxes on that risk, right? It's not like no one's paying taxes, but only after the risk is realized, and which means you actually sell. And if you're going to take money from people that haven't sold, even if they're worth $100 million, the philosophy of itself seems to be a little bit more anti-American and really is leading, Trump's doing this whole communist angle. I don't know how successful Trump will be on this communist marketing angle for Kamala, because, I think a long time ago, that was really important when we were dealing with the Cold War. Now, I don't know how much people care about that. In fact, I think a lot of Americans actually don't hate communism. You guys know my opinion. I'm very anti-communism, but I don't know. I don't know how strong that's going to be, but if he frames that effectively, maybe that's going to get some moderates to feel that that's not the best thing. The second issue with this is it becomes a slippery slope, right? So if it's $100 million, what's the difference between 100 million and 25 million? Like 25 million is still a lot of dollars, right? 50 million is still a lot of dollars. So at what point if this passes, progressives are like, well, 50 million is still a lot of money. 25 million is still a lot of money. Why don't we do an unrealized capital gains tax on those people? Because they don't need $25 million. And so that slippery slope. And then if it goes from 25% to 35% to 40%, that is what people are very worried about. And that could possibly cause a downstream effect to people who may not be worth 100 million, but one day will be worth 25 million. And that could end up affecting them. Final thing I'll say on this is that, a lot of people are sad because it feels like this is destroying innovation. Or like the innovative incentive. If you're a founder of a startup and you work your ass off to build a company and, it ends up getting acquired, S&P 500 up a little bit in the pre-markets, and it raises a lot of money and you're able to take it public, you're probably going to be worth a decent amount of money. If Elon Musk having the 100 million he made after selling PayPal and putting 50 into Tesla, 50 into SpaceX, I think he kind of split it down the middle. That created two of the most important companies on the planet, Tesla and SpaceX. And they're both doing amazing things. They're pushing humanity forward. If that 100 million was taxed to an oblivion and that was gone, or the incentive to make that 100 million was gone, You don't get the next Elon Musk. You don't get someone who's going to take risks. And so I think right now the market is kind of struggling with these economic proposals because a lot of people just hate Trump for a variety of reasons, but they really hate these economic policies. Trump was up in the polls yesterday as soon as this came out. So I reported this news at about 1:59 p.m. because that's when Kamala officially confirmed to NBC News that she is in favor of Biden's fiscal year 2025 budget, which is the 25% minimum tax. And as soon as that happened, you had Trump go from 49.49 to 50.48 on Poly Market. Still neck and neck based on the betting markets, but these economic policies, if they are not appreciated well by the broader market, this might be a really hard thing for her campaign to get through. Or it might be the catalyst she needs if she convinces enough people that, hey, like, you know, we should tax billionaires and billionaires shouldn't exist. I don't know. We're going to find out in the next few months how this plays out. But as of now, these policies definitely aren't the most exciting policies for the tech and for the finance sector. So we'll see. But that is one thing that happened yesterday. And I guess the market is also pricing in a little bit better of a chance that Trump wins based on these poly market odds, which is, you know, here's the thing about the market. I don't know if the market is okay with Trump's tariffs policies more than Kamala's 28% corporate tax, 25% minimum wealth tax. Like, which one does the market like more? Because both of them are kind of not the best. So the question is, which one does the market like versus hate? I think the market would like Trump more because tariffs, you can deal with that. But raising the corporate tax rates, that would hurt a lot of equity prices, just given EBITDAs would decrease, net income would decrease, et cetera. And so the market will have to decide on that. Now, in terms of getting the policy passed, I don't know if this policy even gets passed. You would need to have the House, the Senate, and the executive branch win either to the Democratic side or to the Republican side to get anything major passed in terms of legislation. So Kamala would have to win the executive branch. She would have to win a majority in the Senate and then in the House by at least 2/3 just to be able to pass something like this, given this is such a broad sweeping form of legislation. Maybe that'll happen, maybe not, but that is going to be the determining factor on if this becomes real over the coming months. Okay, let's hear from Tom Lee, who went on CNBC yesterday. He is still bullish on small caps, and he feels that small caps are actually just getting started. So let's take a listen to him, get his thoughts and perspectives, and then we'll move on to thoughts on the labor market and what's going to happen at 10 a.m. with this jobs report.
Now let's get back to the broader markets. The S&P 500 up 8% since that 3% drop on August 5th. Joining me now is Fundstrat co-founder, managing partner, Tom Lee. Tom, good to have you back. Now, I know you're saying that the bottom is in for the market from that early August move. I'm still fixated on your expectations for small caps. I've been talking about them a bit in this hour through the rest of the year. You still think that they could go up 40% by year end?
Yes. John, you know, for small caps to rise 40%.
That's IWM at 300 by the end of the year.
Means that the PE, the median Russell 2000 stock, goes from 10 times to 14 times. So it's not asking the market to provide some magic and a huge revaluation. It's actually just saying small cap stocks, which have been left for dead largely because the Fed's been tight for almost 2 years, as they start to normalize policy and as mergers pick up, you know, its merger activity has been accelerating this year, and it should really strengthen because it's a sign of CEO confidence. All of these flow through to benefit small cap stocks. And it's not like smaller companies are growing slower. I know people post all these stats about small caps losing money. It's mainly because of the biotech components basically don't make money. And that's the largest cohort of stocks in the Russell. But the Russell 2000 median earnings growth is almost 700 basis points faster than the S&P, and top line growth is almost 400 basis points. So you're getting better growth, lower valuation. And I think the catalyst is now when the market is convinced the Fed is embarking on a rate cutting cycle.
Okay.
Could happen Friday.
Okay. So if a 40% upward move happens for, say, the Russell 2000, what happens for mega caps? What happens for the broader S&P 500? Do you expect them to have similarly dramatic moves, or is there a major rotation that you're expecting?
Well, John, we've already witnessed this happen in large caps. NVIDIA's risen 40% in 8 trading days. So when someone says the Russell 2000, which is made up of even cheaper companies, can't rise 40% in the next 5 months, they're forgetting that we've already seen huge moves in the mega caps. I don't think the mega caps have to go down.
Do you expect it to happen in isolation with the small caps is what I'm getting? I know that NVIDIA has done that. Some other stocks have done that themselves. But if you're talking about all of the small, the small caps as an index moving up that much, what do these other things do?
Well, I think that a 40% move in small caps doesn't mean the rest of the market goes down. I just think that's going to highlight that the market is broadening, which is something we all expect, but it's also basically doing a risk reward analysis, which is, look, I think if you can get 18% earnings growth and pay 10 times earnings, perhaps that's a good risk reward. And I think money that's on the sidelines or people who've been thinking bonds are going to be and cash is a place you want to stick for the next 5 years, but if the Fed starts cutting, they're going to look for places where there's good risk reward. And I think that's small caps.
So again, the thesis there by Mr. Tom Lee is simply this idea that small caps, their growth is much better than the S&P 500 growth. He's correct about that. And their PE expansion, if you have the IWM at 300, which is up 400, which is up 40% from the 213 level where it's at in the pre-markets, the PE would only be 14 on an average basis for the entire index. Whereas for the S&P, it's getting close to 24. So you've got a decent level of undervaluation. The problem here well, two things. One, if we slip into a recession, small caps are screwed. And I don't think the recession thing is completely out of the camp. I think it's likely not going to happen, but that's one risk that might get investors to rather go to Google or Tesla or NVIDIA over IWM. Number two is that the IWM still has a lot of crappy companies. So he's saying the aggregate earnings growth is going to be better. The problem is the aggregate earnings growth being better might not compare to the aggregate earnings growth of the Max 7, even if it's technically like percentage points higher, if people don't trust that some of the companies in the Russell are just not good enough to bet on. So I still think Tom Lee has a chance to be right on this thesis. I don't think he's necessarily going to be wrong here. I just think we're going to need a lot of things to happen in sequence. And one of those things obviously is getting a rate cut to the tune of at least 50 bips before I think we see 300, which would mean towards the end of the year, if not 75 bips, and earnings growth to remain strong within a lot of those companies inside of the Russell. But I think the thesis still is intact, and we're going to see how it ends up playing out. Okay, so that's what we had in the context of Tom Lee. So let's get through some other macro stuff right now. So we saw Target had a great earnings this morning. Here is how retail has performed so far in 2024. Walmart's up 45%, Costco 33%, Lowe's 9%, Dollar General down a bit. They're getting hit by inflation a bit harder and like price gouging because they were doing a lot more price gouging. Home Depot's up 7%, Target is up 3%, Macy's down 10%, Kohl's down 28%, Big Lots down 86%. So as you can see right here at the bottom half of the retailers that are down, a lot of these companies, like unfortunately, it's not that the companies suck, it's just that the brands are not like people just don't go there anymore. Like I don't know that many people that shop at Macy's, dude. Like my mom, I used to go to the mall all the time with my mom when I was little to shop at Macy's. Now my mom shops at Shein, right? And she orders, by the way, Shein is suing Temu. This was the most hilarious thing I saw yesterday. Shein, one CCP company, is suing Temu, another CCP company, over like patent infringement or like trade secrets, some like ridiculous thing. So that's hilarious seeing them fight against each other. But these companies are just not that relevant. I mean, the only reason people go to Kohl's is to return stuff to Amazon. So it's, like whereas Home Depot, Lowe's, Costco, Walmart, these are brands that have commoditized a lot of the products that are sold in the other stores, and they've offered broader value. So I think if the consumer is becoming more conscious, obviously we're seeing that shift away, but it's not bad for the consumer to become conscious. It's just a question of if the consumer is able to even be conscious in terms of any spend, right? You'd rather have the consumer having conscious spend versus having no spend at all. No spend is a recession. Conscious spend just means less companies have a share of the consumer dollar, which is okay because that's just what tends to happen in a competitive environment. Another chart right here, the S&P 500 was not able to make 9 days in a row, unfortunately, yesterday. However, it did make 8 days in a row, which was the longest since 2003. These are the longest win streaks ever for the S&P 500. The best win streak was 14 days in a row, higher closes in April of 1971. And then the next best after that is in December 1970 and September 1954. So really, it's been a long time since we had 9 days in a row. The earliest was November 2004. So it makes sense that the S&P wasn't able to get those 9 days in a row, but it did get 8 days, which is not bad. And overall showed that momentum is definitely not stopping, at least for the S&P right now. It is funny because, again, we looked at this chart yesterday. The S&P, you know how they say the market takes an escalator up but an elevator down? It looks like the market has took, if you look at this right here, this V chart, so 565, the elevator down to 510. It was 507 at one point, and then took the elevator back up. I mean, there was really no escalator to get back up. It was a slow decline, and then it was a fast decline, and a fast move back up. And this was, or maybe will be, one of the best dip opportunities in the market over the next couple of years, because some of these stocks might not ever get back to those prices. Now, maybe they do. Maybe we get a recession in 2025 and things fall 30, 40%. But as of now, it looks like all the data is pointing in the right direction and the macro is pointing in the right direction as well. Okay, let's talk about BLS. Let's talk about BLS, Bureau of Labor Statistics at 10 a.m. They've got a lot to say. Thank you, everybody, for being here this morning. Appreciate everyone being here. Josh says Kohl's has a low valuation. I would imagine they do, because, Kohl's is not a household brand anymore. Again, I still go to Kohl's to return stuff from Amazon, but yeah, maybe sometimes I do some shopping there. Like if I'm there, I know my mom does, but like in general, I don't think it's a household brand that people care about. Macy's, again, down 2%. They said that, they're struggling. Comparable sales are down 4% on an annual basis. Question is, will Kohl's be able to put up the growth for the low valuation to justify share appreciation? I'm not sure that'll happen, especially if consumers are flocking to places like Walmart and Target. All right, BLS, they're going to report today at 10 a.m. So 10 a.m. is going to be one of the most important numbers we get in the past couple of weeks, to be honest. Bloomberg is projecting that we're going to see close to 1 million shares, or not 1 million shares, 1 million jobs go down. Goldman Sachs thinks about 600,000. JP Morgan thinks about 360,000, and Wells Fargo thinks about 700,000. Again, this is going to be based on U.S. job growth in the year being revised from the Fed, from what the BLS reported in the past. Now, to me, this is ridiculous. This is absolutely ridiculous. I was talking about this a couple of weeks ago. I think Palantir should control this entire market. I think they need to get a contract with the Bureau of Labor Statistics, and they need to be able to take in all the data that we're getting from jobs in every single sector and be able to accurately tell us what the hell is going on. Because if we can't do that, it just becomes an insane world where if we were actually losing 50,000 jobs a month for the past year, we should have said that. I'd rather that be the case versus like have this propped up market that's fake if it's going to collapse because one day we report the right numbers. Now, granted, my opinion on this, and I talked about this yesterday, I think if we get 1 million jobs to the downside, that's not really going to matter. I still think the market is going to price in rate cuts. The market is not going to have unemployment go to 4.5%. The market's going to see the consumer is still strong. If earnings growth is not suffering, unemployment doesn't matter that much. Unemployment matters when future earnings growth comes into question because unemployment is rising so dramatically. That is at least not what we're seeing right now, especially with the guidance that Target said, hey, we're expecting sales to get better. So far, it doesn't seem like it's going to be in a horrible situation, but I do think the market gets scared and they sell off on this news at 10 a.m., which I think might be a good dip buying opportunity. I was going to buy some stocks yesterday, but then I just realized, well, today might actually be a day we get some pain. And so I'd rather wait until today if the market gets upset about this. Now, the tell sign for this was California and Philadelphia. I'm going to see if I can pull this up. But we saw job declines go pretty bad in California to the point where almost, this is the chart right here. So this is the chart right here. It was almost non-existent in terms of job growth. So per the Philadelphia Fed, average monthly jobs growth was 130,000 in 2023. Biden's Department of Labor reported that this number is 230,000. So Biden said, hey, we're adding 230 a month in 2023. The Philadelphia Fed, which is independent from the Department of Labor, says actually, no, it's 130. That's 100,000 difference that led to the Fed to believe that the economy is far stronger than it was. Now, granted, again, here's the thing. Inflation is still coming down. So it's not like the Fed was totally wrong on this. Like CPI, as interesting of a metric as that is, and although it's lagging in certain places, we did see inflation come down even with increased job growth. However, GDP estimates is, I think, what might take a nosedive if the BLS today reports at 10 a.m. that we lost 1 million jobs, because then it comes down to a question of, well, we're projecting 2.6% GDP in Q3. Does that come down to below 2%? Because if that does, you would see a little bit of multiple contraction in some of these tech names that might have to factor in firing employees or reducing CapEx spend. So this number cannot be understated in terms of its importance. I am of the belief we will get market volatility. It will be a good dip based on how bad it gets, because at the end of the day, the rate cuts and Jay Powell speaking on Friday is going to resolve a lot of these concerns, and earnings growth is fine. But this number, I think, is going to create a very interesting moment in the markets. VIX right now, yeah, VIX is already up a little bit in the pre-markets. We'll see how VIX opens. I would imagine VIX goes up a little bit today as well on that volatility. If it's flat, if we just get no reaction and the S&P is just like flat and stocks just don't care, then that's great. That means all the fear mongering around this jobs report doesn't matter, and this is a bull market where the market wants to go up. But I would suspect there's a little bit of volatility that ends up playing out. Douglas says, Amit, so the real takeaway here is not what the numbers are and whether they are up or down, but whether they can be trusted at all. Also consider, what does this do to AI training models? Yeah, that's a good point. That's a good point. And I think if we're going to trust the numbers, then we have to have some trust in the broader government. And in order to have trust in the government, you have to have some types of variables, like not having lagging shelter data, which is what we have in the CPI, which accounted for 90% of the increase last month. If a metric is 90% of the increase and it's lagged by 6 months, that's just like, this is a clown economy at that. Like, this is just a ridiculous way of analyzing this stuff. So I think it's about trusting the government, but it's also about figuring out what software can we use, what models can we train on that are accurate. And that's why I keep saying, I think Palantir needs a contract from the Fed, because this is, and I'm not the first one to say this. Chamath actually described a product like Palantir a year ago when we were dealing with all this random data in 2023 and we kept raising rates to be able to consolidate all this stuff. Chamath on the All In podcast was like, hey, what if in 2021 some company condensed all the data around consumer sales and mortgage applications, et cetera, and was able to basically predict to the Fed, do a hypothetical simulation of what would happen if we don't raise rates or cut rates. And then the Fed could use that as the basis for at least thinking about policy decision, versus having 12 people in a room that have their own ideological, dogmatic opinions come up with an answer. And so I do hopefully think, we're going to have technology to resolve some of these concerns as well. Okay, let's listen to Liz Young and get her thoughts. Liz Young has turned a bit more bullish on this economy. She was bearish for the broader part of the year. Let's get her perspective here and see what she's thinking about this jobs report that's going to come out soon.
Liz Young Thomas of SoFi and a CNBC contributor, Jason Snipe of Odyssey Capital Advisors as well. It's good to see you. Welcome here. Tony sounds pretty positive to me. You sound like you don't match that. I know that laugh.
The data right now suggests that positivity is warranted.
Yeah.
I think what we learned a couple weeks ago is that the market is not bulletproof, and it makes sense to broaden out your portfolio if it's not broad enough. And I say that for a couple of reasons. Number one, the tech trade has lost a little bit of momentum. I mean, it's bounced back quite a bit. We're almost back at the highs on the S&P, obviously driven by a lot of that mega cap group. So it's bounced back a decent amount, but we do still know that those are the easiest names to sell when people get scared. So you want to make sure that you're still exposed to.
And she's right about that, because if most people have gains in the tech sector. So if you're thinking of taking some profits, the first thing you do is sell off the companies you're up on.
Other things in risk assets and some of the sectors that typically do well when the environment shifts. And we know that the environment is likely to shift come September and November with the Fed.
I'll play your analogy. Yes, it maybe proved that it wasn't bulletproof, but what if it has a bulletproof vest? And what if that is this still good economy, still good earnings, still hanging in consumer, and rate cuts that we haven't even had yet?
So rate cuts are not typically something that the market celebrates throughout the cutting cycle. We might celebrate it as they're approaching and then in the beginning of it, but then as they continue, if the data slows down to a point that people start to get nervous, and I think we've seen that markets have gotten nervous when data comes in cooler than we expect now, which is a tone shift. If the data slows down more than markets expect during a cutting cycle, the cuts start to get interpreted as reactionary rather than proactive.
Unless they're just normalizing, right?
Absolutely.
You're making a point that, if they've cut prior, throughout history, they've done it because the economy has needed that level of cuts. And the more they've cut is because the economy's been weaker and weaker and weaker.
Right.
It might be different this time, dare I say.
It very well may be. And a lot about this cycle has surprised me, and I've gotten a decent amount of it wrong. So I am open to being wrong again. But what we have to remember is that as the Fed is cutting into a weakening economy, it can get dicey. And it is tough for the market to digest that and interpret why the cuts are coming. And right now, we're so sensitive, not just to when they might start cutting. I think we've gotten comfortable with it begins in September, but the size of the cuts. I'm on the side that I don't think 50 basis points is that big of a deal, because they raised on the other side when we were coming into this, they raised by 75 basis points 3 times in a row. So I don't think 50 basis points would be an alarm, but I think the market would be a bit alarmed by that. So I think really more so we're going to have a digestion issue as we work through this. And even if we do secure a soft landing, the data is going to contradict at different levels. Some of it's going to be slow, some of it's going to be hot, and the market's going to have to react to that. And we're very reactive right now to every little piece that comes in.
Okay.
And that, again, what she's saying, we're very reactive to every piece that comes in at 10 a.m., dude. That's why I think it's going to be very volatile, because we are so reactive. I don't think the bulls or the bears fully believe we're out of the blue, because at some point when every bear starts to really capitulate on that 507 bottom that we had, then you may start to see a bit more momentum, because money finally starts to come in. Fund managers finally start to say, all right, it's time for us to put some money to work. I don't think that's there yet. I think if the BLS data comes out today at 10 a.m. and we go down, I mean, at the crazy level, I think it could be 2% max pain. It's probably going to be 0.5%, maybe 1% on the S&P. And I know even that is crazy to say, but I'm not saying that because I think it deserves to go down. I think the market's just going to react that way. That is where you might have bears say, see, we told you so. Job market's bad. Consumers eventually getting bad. We have way more unemployment than we thought, yada, yada. And the fairy tale around how bad everything is might not become a fairy tale anymore. It might become at least real to a lot more people. So we are so reactionary to every piece of data that today's data is going to be very important in 30 minutes. And it's going to determine, I think, how a lot of the market goes. Now, I will be the happiest person in the world if the market doesn't care or the market somehow goes up on losing 1 million jobs. I'm surprised the market hasn't gone down a little bit just in anticipation. Well, that's my thing. You would think the market prepares because it prices in future news, and the market would be down. If the market was, so for example, if I say, hey, the market will drop 1% on this news, the market would probably already be down 1% leading up into it, because it knows what the number is going to be. I just kind of feel this market is so volatile that maybe that's not the case. And when we get the number, that's when the market really reacts. But if they don't do that, I'll be very happy, because that just means it's a nothing burger and we can move on with the bull market. And hopefully that thing plays out. Kevin's praying for it. Oh my God. Yeah, dude, if you're a bear, dude, you're praying for this number to be so bad that it justifies being bearish. Again, do I think we go to 507 from 560 because of this number? No, dude. I just don't think that's going to happen. I mean, look at Eli Lilly. It's up another 1%, 960. Eli Lilly basically if you go to the year to date, yeah, literally at the top. 967 was the top, basically at the top right now. It was at 961, went all the way down to 742 on August 5th, came all the way back up, because people realized the GLP-1 growth, the Ozempic growth that Eli Lilly's putting up, it's monumentous. This is why Hims has got more momentum, because Hims is taking a small part of that market. Eli Lilly kind of owns the majority of it. Hims is up 1.3%. So there's so many factors outside of just AI that are pushing the market higher at sort of thematics like cybersecurity. We saw Palo Alto, dude. I think by the end of the day, Palo Alto yesterday, yeah, dude, it was up 7%. I didn't expect that happening. I thought it would, max out at 2, 3, 4%, maybe 5%. It went up 7%. Yesterday was a red day. So there's different thematics in the market besides AI, like cybersecurity, energy, we've talked about a lot, and crypto, which hopefully catches a bid soon, that are building momentum, and a rate cut helps all of them. The reason SoFi is holding the mid sevens is because rate cuts helps SoFi as well with lending, and banks and regionals and XLF. Like, all of this stuff has started to do well. It's just a question of, can we maintain this momentum till the end of the year? NVIDIA at 127. We got a minute until the market opens. NVIDIA right here, up a little bit in the pre-markets right now. CrowdStrike as well, up a little bit in the pre-markets. Fortinet, Centennial, they all got a bid yesterday from Palo Alto as that started to go higher. Bitcoin tried to make a run at 61 yesterday. Right now at 59, really hasn't been able to catch too much momentum. Looks like the rate cut is, again, what Bitcoin needs as well to get some liquidity. And also, Nancy Pelosi, she bought at 270. So for anyone who followed her into that, I think we got the news when Palo Alto went from like 275 to like 285. So you were a couple dollars off from her timing. But if you got in when she got in, and she got call options, so she's done very well. Basically, Palo Alto's up almost 45% from when she bought, which is, again, like, Nancy doesn't lose. Nancy just does not lose. All right, here we go. 30 minutes after the market opens. We'll see what actually happens at 10 a.m. when we get this job report. 9:30, August 21st. Thank you, everybody, for being here. The stock market is now open. Wake your asses up. Here we go. Palantir opens red, 32.25. If you're just joining, Insider sold about 2 million shares yesterday across David Glazer, Ryan Taylor, Shyam Sankar, and Alex Karp. Stock really not being affected too much from that. Stock was able to take that easily because there were enough buyers for those shares. Opening a little bit red at 32.14. SoFi 743, HIMS 1660, S&P 500 559 on the day. IWM at 214. IWM opens up 1%. S&P opens up about 0.2%. HIMS opens up 0.42%. Tesla 222. Tesla gaining some momentum right here. It's been up about 5% this entire week. We'll see how Tesla continues to go. Tesla now up 1% on the day. Again, that 10-10 event, I think, is what everyone's looking forward to. And if Elon announces specific timelines on the robotaxi, I think it's going to be excited. One thing on Tesla, Waymo yesterday announced they're doing 100,000 paid rides, self-driving, autonomous, every week. So Waymo's ramping up. Again, their technology is fundamentally different from Tesla and FSD, but it is showing that there is a market for autonomous driving, and that's just in a couple cities worldwide. QQQ at 480, PayPal 72.66. We did some TA on this on the market close. PayPal needs to close at around 72.50 today to confirm the trend that PayPal is moving up. If it closes at 71 or, in the 70s, like in the low 70s, then we're back into the downtrend. So 72.50 is the level you want to look at for PayPal because that would be a good close. Robinhood opens down a little bit, 0.4% at 1975. Intel up about 1%, 21.22. Snowflake, after the bell, we'll have earnings today on Snowflake. I think Snowflake is going to crush it because their stock has been sold off to the tune of 40% this year that I think they can only go up. If they go down, then that's just going to be really bad for Snowflake. So I think they crush it, but we'll see what happens with Snowflake today after the bell. They're going to have earnings, and then Zoom has earnings after the bell today as well. Amazon at 180, Celsius at $40, Fubo up 1.55%, NVIDIA basically flat on the day at 127, Palantir basically flat as well, 32.18, S&P 500 is green, SoFi flat as well at 737, Bitcoin getting a little bit of a bid, Tesla 222, and Apple at 226. Let's look at the Mag 7. We got Microsoft down, Apple down, Meta's up, Google's down. Google's down 1%. Interesting. I don't know why Google's down 1%. Amazon 180, that's up 1%. NVIDIA 127, then Tesla at 221. So Tesla is holding the momentum for the Mag 7, which is not bad at all. S&P, again, S&P is green really at 10 a.m. That's when we're going to figure out how green we can stay. 559 right now on the S&P. Up about 0.17% on the day. Intel is up 21.19. Let's check out Target. Target at a monster earnings. Target, wow, 15%. Shout out to those who have Target. Look at that bump, dude. Look at that bump. Someone posted today on Twitter under my Target post that they had 100 shares or something at Target at 140 average. So they're up nicely on it today. Target was in a downtrend for the majority of the year. If we look at the year to date, yeah, it fell from 179 all the way down to 130 and really was stuck at that 140 range. So it makes sense that his average was in the 140s for the majority of the year. And now we're here at 165. If you're confused why this is happening, is for two reasons. They raised guidance. Not only did they beat revenue and EPS, they raised guidance and they said the consumer is strong, which is what the market really cares about. Rocket Lab is down 2.7% of the day. Again, Rocket Lab's up 40% in the past couple of weeks. So this is not that big of a deal. AMD is up at 156. Look, AMD is more expensive than NVIDIA. Their PEG ratio is 3x NVIDIA's PEG ratio. The growth is just not comparable to NVIDIA, but the market thinks that AMD is a little bit of a baby NVIDIA that's eventually going to grow and upgrade and then going to benefit from an upgrade cycle around personal computers, which haven't been upgraded in almost a decade. So if those Ryzen chips beat out the x86 chip for Intel, you would imagine AMD takes a lot more market share. But AMD right here at 156 from the lows of 120. So if you bought that 120 low, not bad at all for AMD. NVIDIA right here, 127. NVIDIA just goes green right at the bell. Oh, at 2 p.m., we're also going to have Fed minutes. That's correct. So on the market close, we'll talk about those Fed minutes. So not only at 10 a.m., you should expect some volatility, but at 2 p.m., we're going to get the Fed FOMC minutes. We already know what the Fed said at the FOMC because Jay Powell talked about it. However, he's going to, we're going to get to see what the actual committee members talked about. Did they discuss 50 basis points? Did they discuss, no rate cuts at all in September? Those actual, words, the transcripts, we're going to hear from them. and get a better perspective of what the Fed thought about. So 10 a.m. and 2 p.m., I think this is going to be a very volatile day, either to the upside or the downside. And I mean, for me, if it gets really bad, we've got some money ready to buy the dip. So let's see how this ends up playing out. Okay, cool. So we got the S&P 500 right there at 559, Palantir at 3209, SoFi at 730, HIMS at 1651 right now. On the day, Siri is up 11%. You know, Buffett did buy a crap ton of this thing. I still don't know why. Oh, by the way, they had a crazy deal yesterday. Alex Cooper of the Caller Daddy podcast. Let me know if anyone heard this. Caller Daddy just got $125 million from SiriusXM. Caller Daddy got $125 million from SiriusXM. Look, Caller Daddy, this is kind of a podcast where she basically talks about sex. That's kind of her demographic. Women mainly consume the podcast. You might be thinking, how the hell does SiriusXM have that much money to pay her $125 million? She used to have a Spotify deal for about $60 million. It's just crazy, dude. Podcasters are making like NBA basketball contracts, which is insane. The reason for this is because I think that they think she's going to bring over a big demographic of Gen Z, especially of Gen Z women, onto SiriusXM. And so I don't think this is why Buffett bought the app or bought the stock, but it does prove that Buffett feels there is more growth potential in SiriusXM. And for them to dish out basically a Howard Stern type of deal to Alex Cooper, they're going to make a lot more money on that in advertising, and they're probably going to get a lot more users that download the app to listen to that podcast. So that's why I think that stock is up today as well, up 10%. And obviously because Buffett increased the stake over a while. Douglas says, Amit's like, where's my money, YouTube? See, the thing about YouTube is they're never going to pay a streamer for money because, or they're never going to pay a streamer money for audience because YouTube is a tech company. Remember, this is why I don't like Netflix. Netflix has to pay for content. SiriusXM has to pay for content. Spotify has to pay for content. YouTube just gets the content because they're a search engine. And the reason you post on YouTube, the reason everyone posts on YouTube is because YouTube is the platform for discovery for the entire world, right? 2.4 billion people. So YouTube's never going to have to dish out serious amounts of money unless they really, really want to keep you from like going to Twitch or something. Robinhood right here, 1974. And that's why Google, I think, has a massive advantage with YouTube. And that's why YouTube's probably worth a lot of money outside of Google. Cruise lines flat on the day, 1533 are on Carnival Cruise. Celsius at 40.80, that's up 1%. Amazon at 180. DJT, again, we talked about Kamala's new tax policies. Not really the best, and Trump's now winning in the polls. DJT is up 3%. I do think this stock goes up if Trump wins the presidency. I just think it gets sold off very quickly after that. So if you're playing this, it's really a bet that Trump wins. But after that, I don't think it really holds up, especially because he's back on Twitter now and he doesn't care too much about Truth Social. JD is down about 9% because Walmart is selling their entire stake in JD.com. This one's down about 7% on the day. They're trying to sell their shares about $24, about 140 million shares. So Walmart's looking to raise about $3 billion from selling their stake in JD. That's why Walmart stock is up 1% on the day. Walmart raising some cash. That's going to be good for them. Palantir right here at 32.12. Let's check the resistance on Palantir and see where the resistance is to get to 33 and see if it has a chance to get there today. Again, I only think Palantir can really get some more momentum if the jobs data is less than bad, and the market's expecting really bad. So it wouldn't be just Palantir. The whole market's going to rally. Like if we only lose like 100,000 jobs, dude, the market's rallying like crazy because the market's expecting 1 million jobs. If we only lose like 250,000, I think the market's going to moon. But if we lose close to 500,000, then I think it's going to be tough. Resistance at 33 is pretty much non-existent. Yeah, it's about 20,000 shares, which is not too crazy. Getting to 33 will be hard. Yeah, the volume, look at the volume. It's only 2 million shares. By now, we would have almost 10 million shares traded on Monday. So volume has died, even though 2 million shares is great volume. It's just not as much compared to what it usually gets. And the path to 33 is going to be a little tough unless we see a macro turnaround based on this jobs data. So we'll see what happens there. The fact that we're holding 32, or even if we hold 30, dude, I think it's incredible for Palantir. And again, for those that didn't know, Lowe's did call out Palantir in their earnings yesterday and said that they're a leader in AI. Target up now 16%, almost 17% of the day, 166 for Target. Not too bad. Rocket Lab continues to go down about 3.5%. Let's look at crypto stocks. Crypto is down across the board. Coinbase is down. CleanSpark's down. Marathon's up a little bit. Bitcoin basically flat on the day. MicroStrategy also flat. Marathon flat. Really, there's no unique news on Bitcoin. The Bitwise CEO did say yesterday that he sees more institutional investors just starting to get in based on his conversations, he said on some interview, which is fine. But like until we really see a lot more buy side pressure from the institutional investors. I don't know if we're gonna get too much momentum. So that's something we're probably looking at when it comes to Bitcoin getting some love. Let's take a look at this chart right here. We've seen a lot of change since 2009. Here are the top 10 companies in March of 2009 versus in 2024. As you can see, a dramatic change. The only ones that are still the same here is Microsoft. So Microsoft was number 4 back in 2009. Now Microsoft is number 2 in terms of how much percentage of market cap they ultimately have a hold of. So there you go. Obviously, the world has fundamentally changed. Technology is leading the way, and the reason technology is leading the way is because of their pricing power and their margin capabilities. That shows you a different bull market than we're in versus in 2008, 2009 when the market was recovering. And now the question is, can we just keep that momentum going? I just opened up Twitter, and here's our boy Andrew, friend of the channel. Look at this. Apparently, his options are printing on PayPal. So he bought, I'm just looking at this right now. He bought 712 contracts. Andrew is such a degenerate, dude. Andrew is such a degenerate. 712 contracts of PayPal. He bought this in August 2023. What was his strike? I think strike is 90 or 100 on that. Or yeah, I think it was 70. He's up 85% on that. There you go. He's up 28 grand. Shout out to Andrew, friend of the channel. Such a degen, dude. 712 contracts on PayPal. Like, I knew he had PayPal stock. I didn't know he had PayPal 712 contracts. So if you're in PayPal, congrats, man. It's gone well, and it's starting to do a lot better. Aramco is Saudi Aramco. That's an oil company. People don't know they went up. They IPO'd at $1 trillion, bro. Like, that even surprised me. I did not know they were the first $1 trillion IPO. I think it was 1.5 trillion. But Saudi Aramco also still in the top 10 from where it was in 2009, along with Microsoft. Oh, it was $100 strike. Yeah, you're right. It was $100 strike. $100 strike. And dude, if PayPal gets to 100 by the end of the year, I mean, I think it's asking for a lot. It's at 71.55 right now. Oh, wow. It's down 0.38%. So it's down from 72. We need to hold that 72 level. I don't think 100 is crazy if we get an insane melt up in the broader economy and like in the broader market. I think 90 is a little bit more realistic, but I think just holding 75 would also be good. They did get a ton of upgrades yesterday, so the street's starting to get excited about PayPal as well, which hopefully will help the momentum in that. Again, PayPal is still undervalued at 71. PayPal is still undervalued. It was undervalued at 58. The problem is the narrative was that it was too competitive in that space. Palo Alto now down 1% on the day. That narrative might be changing. And when narratives end up changing, stocks honestly, start to react to a lot of those narratives. 221 on Tesla. All right, let's get an update from the professor at NYU and get his perspective on NVIDIA. He thinks that there is a better stock at a better valuation than NVIDIA right now. Let's get his perspective and see what he has to say. And he also thinks NVIDIA is a bit overvalued.
That rally and the broader market bounce justified. Well, joining us now is Aswath Damodaran, Wall Street's Dean of Valuation, Professor of Finance at the NYU School of Business. Always good to see you. So NVIDIA looks stretched. Does that mean you sell it?
I think it's a dangerous game to play. If you don't own it, the only way you can sell it is to short the stock, and that's a recipe for disaster, especially leading into an earnings report. And the way to think about NVIDIA is, are you a trader? In which case, you buy at a low price and sell at a high price, and NVIDIA might be the game you want to play. Are you an investor? Where you're buying based on earnings and cash flows. NVIDIA is an amazing company, great growth, amazing cash flows, superb margins, but you're paying a premium price, even given all of those pluses. So I think you've got to be honest with yourself about the game you came to play.
So, and broaden that out for the whole market. You make an interesting point here. You say hubris is the greatest sin in investing, the excessive pride. And when people use the word bubble, it tends to be a sign of hubris. Explain.
I think that when you use the word bubble, you're essentially arguing that the rest of the market has lost its mind. And that, to begin with, is a sign of an ego that's out of control. When you think something is overvalued, all it means is you think it's overvalued. It doesn't mean it's overvalued. It doesn't mean you have the truth. You have your truth and you got to act on it, but the rest of the world has their own truth. So my view on investing is make your own judgments, but don't pass judgment on other people buying or selling stocks because you don't like what they pay.
So in your judgment, among some of the mega cap stocks, what's a better deal right now?
I think Amazon is a better deal than NVIDIA as an investor. if you wanted to go with the mega tech.
So who agrees with that? Would you rather buy Amazon at 180 or Nvidia at 125? Let's see what you guys think.
I think Amazon is a better buy than NVIDIA. It might not play out that way as a trade, but I think given the earnings and the cash flows, if I had to buy a stock now and you force me to buy a big tech, I would rather own Amazon or buy Amazon than buy NVIDIA right now.
How are you valuing small cap stocks, which have performed not as well as mega cap names that we've been discussing so far? And when should investors, not traders, but investors, start charting out narratives that make sense to them where those are concerned?
I think a lot of people believe in mean reversion, which is they assume that if small caps have underperformed for a while, they've got to come back. I'm going to posit that there's been an economic shift, that the way the economy is structured is you have more winner-take-all businesses, which effectively put smaller companies at a disadvantage. So one reason why I think small cap stocks have underperformed larger cap stocks, not just over the last few months, but over the last decade, is because the market seems to have come to that realization as well. It might have overcorrected, and there might be some kind of a reversion back, at least to a more normal pricing. But I'm going to argue that those people who expect the old small cap premium, small caps historically have delivered higher returns than large caps to come back, might be barking up the wrong tree.
I mean, it's an interesting point when you think about what's happened to salaries, to incomes in our society, right? The inequality, the wealthy have tended to get wealthier, and the working class hasn't fared so well. If you looked at income the same way you looked at stocks, you would expect, well, eventually, the working class has to catch up, and it doesn't work that way.
NVIDIA just went green, by the way.
Not quite, and especially in business, because if your economy is structured with 3 or 4 winners in every sector, what is it in the economy that's going to force the smaller companies or allow the smaller companies to catch up? It just doesn't.
So basically, he's bearish IWM, which makes sense. I mean, the Ashwath doesn't really. He really prefers quality companies. IWM is filled with not too many quality companies. But he likes Amazon over NVIDIA. It's interesting. Most of you in the chat kind of agree with him. Some of you think more NVIDIA, and a lot of you are more on the side of Amazon at 180. I do think the risk reward, maybe in the short term, is better, just given Amazon fell. NVIDIA recovered a lot from its fall. I mean, NVIDIA is almost at all-time highs. Amazon is still far away from that. S&P just went green at 560, and NVIDIA is green right now. Amazon, I think, is also green on the day. But long-term, I don't know, man. I mean, I know it's crazy to say NVIDIA goes to 10 trillion. I know it's crazy, but does NVIDIA go to 10 trillion? If AI gets that crazy, does NVIDIA go to 10 trillion? Or does NVIDIA go to Amazon's at 1.9, NVIDIA's at, 2.5? Does NVIDIA go to 5 or 6 trillion? NVIDIA's at 3 trillion before Amazon gets to 4 trillion. Again, NVIDIA's gross margins are 77%. Amazon's margins are just not as high. They're high on AWS, but that retail business really weighs them down. And that's the part that, they've been trying to start to become profitable a lot better. But Amazon's less cyclical than NVIDIA. I mean, NVIDIA, one day we wake up and we don't need GPUs anymore. NVIDIA's done. It seems like we're always going to need cloud computing, even if we don't need it as much as we're getting right now as the AI infrastructure builds out. And we're definitely always going to need products from Amazon, the commerce website. So I think those are the two perspectives right there. But NVIDIA just went green, up 1%. Amazon's green. Palantir basically is flat, but it just went green for a little bit. SiriusXM now up 5%, so it got sold off when it was up 10%. Target still up 15%, and S&P 500 just got a red candle right there at 560. We have 10 minutes, folks, until we see this jobs report at 10 a.m. Robinhood just went green as well, 1985. Entire market basically just flipped. At 10 a.m., we're going to see if this green lasts or if this shit goes down the drain. On the poll, it's basically 50-50. I put a poll in the chat. 52% say NVIDIA, 48% say Amazon. So 50-50 right now with NVIDIA at a slight lead. Ask Steve. Dude, Steve's definitely going to say... Well, Steve loves NVIDIA. Dude, Steve's been selling a lot of stocks to buy NVIDIA. Steve, you talk about someone sipping the Kool-Aid, dude. I remember Steve called me early or late June. I think I told you guys the story. Steve calls me and he's like, dude, NVIDIA. And I hear him talk for an hour about NVIDIA. Then Chris calls me an hour later. It was like a storyline played out. Chris was like, dude, we got to be worried about NVIDIA. And then I said, all right, we're doing a group call tonight. And then I put all three of us on the phone, and I just heard them go back and forth at each other. And Steve's like, you don't get it. And Chris is like, you're being too bullish. And Steve's like, no, but you don't get it. And Chris is like, no, you don't get it. And it's like hearing mom and dad argue about NVIDIA. So one of them's going to be right, dude. One of them's going to be right. NVIDIA is not going to be flat. It's either going to go to the moon or it's going to have an epic collapse. I think one of those things is going to happen over the next 5 years. And we're going to see who ends up being right. But Steve is getting rid of a lot of positions for NVIDIA, but he also really loves Amazon. Amazon will probably be the first $1 trillion revenue company by 2030 or 2028 is the projection, because they're already at 600 billion. If they CAGR at close to 15%, they're getting to $1 trillion in revenue by basically in the next 4 or 5 years, which is going to be insane when you see that headline, dude. The first company in the world doing $1 trillion in revenue. Like, that is going to be absolutely insane. NVIDIA's already at the moon. Well, if Jensen comes out and says we're raising guidance, dude, again, the only bear case on NVIDIA Palantir at 3240 is the Blackwell delay leads them to lower guidance in October, which I don't think it tanks the stock, but I definitely don't think it like helps the stock go up. We know they're going to beat on the Q2 numbers. The question is if they raise on the Q3. But if they raise on the Q3 and they say Blackwell is not that big of a deal, I mean, dude, I don't know. I think it'll get fun. I think it'll get really fun. It's either a massive sell the news, like a tremendous sell the news, or it's a holy crap, NVIDIA is going to really be the company everyone thought it was going to be. Google at 165. Google's down a little bit. Palantir at 3240. Ulta is up another 3%, dude. It's up almost 20% in the past week since Buffett disclosed. Meta's at 530. Regionals are down a little bit. Apple at 226. Enphase at 118. Enphase is actually getting some momentum. Enphase was at 105 last time I saw it. And then Palantir right here at 3250. Once again, getting that momentum to 32.5. Where's Tesla? Wow, look at Tesla up 1%, 1.3. 224 on the day. We did some TA on Tesla yesterday. Maintaining like 225 to 230 would be really bullish for a solid uptrend, and would kind of confirm the bull flag you're seeing on Tesla. But if Tesla doesn't, if Tesla breaks back down, or 216, that's actually the level that we need to look at. So 216, we need to stay above that. Below 216, you start to just get into consolidation or a downtrend. So it's holding nicely above 216 at 224. And, again, my belief is on 1010, if they announce specifics, the stock will go up. I don't think it'll be a sell the news event. If they just, hodgepodge around it and just like show off the vehicle, but don't say anything about the rollout of robotaxis, I think the market's going to be like, please don't waste our time. Because I think the market is legitimately annoyed at this point that FSD is not real. And you got Waymo walking around the streets doing 100,000 rides a week. So I think they want specifics. And I think if Elon gives some specifics, we're going to get some more momentum. Ulta is in target. Correct. Ulta is in target. Ulta is definitely helping Target. Dude, Target 14%. Not a bad day for Target, man. Really, really good stuff for Target. I mean, we wanted to see Target do well, just like we want to see Walmart and Costco do well. And Q2 earnings is basically done. We have NVIDIA, Snowflake, Zoom. We have a couple other companies left and CrowdStrike. Once that's done, I mean, the next catalyst is going into Q3. And if these retailers put up decent numbers, and again, they guided Walmart, Target, Costco, they said Q3 is going to be fine. Q3 is fine. We get a rate cut. Market doesn't care too much about this jobs revision we get in 7 minutes. Maybe things end up not being as bad as we thought. Okay, so we got 7 minutes until this jobs report. Let's hear Dan Ives on Apple and get his upgraded thoughts or updated thoughts on the upgrade cycle for Apple. By the way, we're not in fear anymore on fear and greed. Now we're in neutral. So we are back to neutral from the fear and greed index as we're approaching all-time highs on the S&P. Here's Dan Ives on Apple.
The reason this is an AI-driven super cycle, it started off as 80 million units in terms of in what Apple was ultimately ordering, and now it's up to 90 million. And I think as that trajectory continues, we could be looking over 240 million iPhones sold in 2025. That would be a historical year for Cupertino.
Do you assume the same distribution, which is through the wireless phone companies where they're competing and will give our listeners and viewers a deal spread out over months? Is it business as usual? Or is there a new twist to Sweeney having to buy 7 iPhones?
I need this guy's bow tie. I need those headphones. I need this shirt. I need that jacket. I need to talk as slow as him. That is an aesthetic right there, dude. I like this guy. He has some swagger.
Well, no, look, I think the reason Sweeney and others are going to upgrade because you have 300 million that haven't upgraded their iPhones in 4+ years.
Is Tucker on that list?
And we expect what I would call game-changing promotions, from U.S. carriers for this, and that's why you look at the stock continues to move higher. I think this is a stock that has a 3 in front of it as we go into call it the next 9-12 months.
Dan, you mentioned you were in Asia and heading back in a couple of weeks. Give us the update. Give us the latest on Apple's competitive position in China.
Look, China's the hearts and lungs of the Apple story. I mean, 20% iPhone demand, that's been negative growth the last, call it 4 or 5 quarters. Everything we're seeing, we now will see growth. That could be ultimately double-digit growth. And China is really now going to be a key to driving this upgrade cycle. And that's everything we see through the supply chain. Clearly, you have the geopolitical headwinds, but I do believe a lot of that's abated. They played nice in the sandbox in Beijing, and I think that's benefited.
That's hilarious. Nice in the play box in Beijing. I mean, that's what you got to be when it's Beijing. You've got to be a bit nice in the play box there. All right, so we've got 5 minutes, folks. Again, I kind of agree with Dan that I think the upgrade cycle will be good. I do think my only concern a couple months ago or a couple weeks ago was if the consumer's slowing down, who's going to buy a new iPhone? But if the consumer is not slowing down, maybe everyone decides to buy a new iPhone. All right, so here's what we're going to do. We're going to pull up Twitter, and we are going to make 2 versions of tweets right now. 2 versions of tweets. So here is the BLS website. We are going to see at 10 a.m. Wait, no, this is the wrong one. Let me pull it up. BLS job report revisions. This is the website right here. I think this is the one. This is the one we have to refresh to see the job revisions. And we're going to draft a tweet. Either it's going to be bullish or it's going to be bearish. We're going to see what it looks like. Jobs data release. Okay, so today, 10 a.m. Yeah, this should be the one. This should be the website. All right, so this should be the website where we get the data. And we're going to see how it plays out. So let's go to Twitter. Let's do we got to do caps lock on this. Bloomberg's expecting 1 million jobs down, so we're gonna do jobs BLS. Oh, we'll spell it out. Bureau. How do you spell bureau? Bureau. Why does that word sound so hard to spell? Bureau of Labor. Bureau of Labor Statistics. Bureau of Labor Statistics reports. Oh my God, we have 3 minutes. I'm so nervous. Bureau of Labor Statistics reports that the U.S. economy has lost 1 million jobs over the past year. Has revised jobless, has revised the jobs data to include a 1 million loss, loss of jobs over the past year. Okay, so that's the million one. Oh my God, we have 2 minutes. Here we go. And then we'll do another one that's like 500,000. Bureau of Labor Statistics reports that the U.S. economy has revised. Oh, no, not that the U.S. economy. Yeah, this is too complicated. The U.S. economy has lost 1 million jobs in the past year. Make it more simple. All right, here we go. Let's see. We have 2 minutes. We have 2 minutes. This is the million jobs one, and then we'll have the 500,000 one. We got to be quick on this. Let's see. I want to tweet the 500K one. I don't want to tweet the million one, but let's see which one this ends up being. Joseph, thank you for becoming a new member for the channel. Thank you, Joseph. Really appreciate that, for becoming a channel member. Okay, here we go. Let's see. We have 1 minute, folks. 1 minute. We're going to tweet out one or the other. I'm putting it on the million one because, let's do, maybe it's not a million, so let's keep it on the 500K one. Let's see. If it's 1.1 or 400K, we'll adjust it really quick, but let's see. All right, we got 30 seconds. Oh boy, Bitcoin's up 750 in 1 minute. Holy crap, dude. Market's green right now. Palantir's green, Bitcoin's green, SPY is at 560. Does the market know already? Does the market know? Did it come out and the market doesn't care? Oh boy. Oh boy, oh boy. All right, here we go. About 30 seconds. We are going to see. About 30 seconds. I think, dude, if market's going green right before I think the market knows and the market doesn't care. Look at that. The S&P's up almost 0.5%. 0.3%. I don't know if the market cares, dude. I don't know if the market cares. All right, 2 seconds. Here we go. 10 a.m. We should be getting the number. I'll let you guys know as soon as I get the number. As soon as I get it, I will say it. As soon as I get it, I will say it. If you guys have it in the chat, let me know before. I don't have it yet. I don't have it yet. Let's see. Still don't have it. Dude, everyone's waiting. No one has it. No, Mark, S&P's. Oh my God, S&P's pumping. Oh my gosh. Okay, what's the number? I'm still waiting for it. It's still refreshing. I don't have it. It's over 500K. Okay, some of you guys have it. I still don't have it. The website doesn't show it yet. Dude, where the hell is it? Oh my God. I don't have it yet. Does anyone have it? Does anyone guaranteed have it? 360K? No way, dude. 360K, that's it? There's no way it's 360K. That would be insane. Wait, let me just hold on, let me pull up CNBC. Why don't we have that either? Let me pull it up. It's not on the website, dude. I think it's late showing it on the website. Markets are pumping though, dude. Well, market's now chilling a little bit. Let me go to CNBC and see if they have it.
Up in just a few minutes.
We are 30 minutes into trading right now, and here are three movers we are watching. Toll Brothers.
Dude, how is CNBC not looking at this number, dude? How is it not looking at 530? Some of you were saying 536, 684, 1 million. Oh, you guys are just trolling with me, dude. You're just saying all the numbers. How is CNBC not covering this right now? This is so important. Why does the website not show the damn number? Goodness gracious, it's still not out. What is going on right here? Dude, how is it still not out? It's really not out. You guys are throwing these random numbers, dude. What the hell? Dude, it's not out. It's really not. No one on Twitter has it. The website is that. Were they trolling us with 10 a.m.? Like, was it not going to be 10 a.m.? What? This is all the big accounts don't even have it up yet. This is ridiculous. Let me just go back to the stock market. No one has it. Dude, I was actually believing some of you guys. Then I realized someone said 420,000 and I was like, okay, you guys are fucking trolling at this point. S&P's green. So S&P doesn't quit care. S&P's green. No one has the numbers yet. Absolutely no one has the numbers. Dude, these numbers were scaring me in the chat because I saw 530, I saw 600. I was like, oh, so someone has the numbers, but no, it's fucking just joking with it. Meet Kevin, Meet Kevin can't have it. If the website doesn't have it, there's no way Meet Kevin has it. Dude, what is going? CNBC doesn't have it. No one has. Yo, were they messing with us, bro? Was it not going to be 10 a.m.? It's tomorrow. It's definitely not tomorrow, dude. Oh my gosh. Where are these numbers? This is why we need Palantir with the Fed. This is ridiculous. We need things on time. Literally no big account on Twitter has it. No account has it. That means it's not out. It's not out. Okay, so I guess are you sure? It's 10:05. I don't know what to believe now, dude. 10 a.m. Pacific? No way. Hold on. I can confirm if it's 10 a.m. Pacific. Let me check right there. There's no way. If it's 10 a.m. Pacific, that's going to suck. There's no way it's 10 a.m. Pacific, bro. No way. Today's what, Wednesday? Today's Wednesday. 10 a.m. Pacific is what time? That's 2 a.m., right? No, 1 p.m. That's 1 p.m. 1 p.m. we get the minutes, not the jobs. 1 p.m. we get the minutes. They pushed back to 10:10. Jobs, labor to be. No, but that's a different revision, dude. They get a revision every month. We have to get a revision today. Did you forget to change your clock? You guys are having way too much fun with this. No one's even talking about not having the. Dude, this is ridiculous. It's 10 Eastern. It should be out. S&P's still up, though. NVIDIA's up 1%. Tesla's pumping. I wonder if this is a fake pump. Oh, Tesla just went red. Holy crap. Tesla just went red. Is NVIDIA going red? NVIDIA's still holding up. Tesla just went red. NVIDIA's holding up. S&P we got a red candle right there on the S&P. So S&P just went red. It didn't go red, but it did go down a little bit. Bloomberg says pushback. Hold on, let me go to Bloomberg. Bloomberg jobs data. This is very weird, dude. I've never seen this happen. I have not seen this happen in a long time. Yeah, it's definitely today, dude, because the article from yesterday says it's going to happen this today, which is Wednesday. Does CNBC have it yet? Let me see if CNBC has it. I don't think CNBC has it either. No, they're talking about fucking Target, dude. Oh my gosh. No one has it. No one has it. I'm on BLS, but I can't see any reference. Same. I'm on BLS and I can't see it either. I'm trying to find the website that showed me it was at 10 a.m. or said it was at 10 a.m. Look, S&P just went red, or it's like you're getting a mean red candle right there. So we're seeing stocks react, but I don't know what they're reacting to. They're re-rolling the numbers forever. Goodness gracious, dude. Dude, it was definitely at 10 a.m. Oh yeah. So it's not just me. It's not just me. Okay, look at this quote. This is a tweet from a big account. This is a tweet from a big account right here. He's waiting as well. You see, that's a meme. So this is a big macro account on Twitter. Everyone's waiting for this. Everyone's waiting on these numbers, bro. Yeah, Meet Kevin doesn't have it either. Is he complaining as well? For those in me, is he complaining as well? Let me just go to his stream. Let me see. Is he complaining? Let's see. Is he live? He has to be live, right? Yeah, he's live.
Where's the actual revision number? Why do they make this so freaking hard?
Dude, everyone's like, what the fuck? Everyone's like, what the fuck is going on, bro? Everyone. Did Bay Ray just say, who is that? Can everyone say L Bay Ray for not knowing who Bob Ross is? Can everyone say L Bay Ray for not knowing who? Dude, if I know who Bob Ross is, you are, dude, that is a L Bay Ray if you don't know who Bob Ross is, bro. Have some culture. Have some respect, okay? Have some respect for the GOAT. Who is that? It's Bob Ross, my guy. Bob Ross. Dude, everyone's waiting for this stupid jobs number. This is insane. This is insane. Meet Kevin's like, where the fuck is this number? Well, that's so funny, dude. That's so funny. It's 7 minutes late now. It's 7 minutes late. This is crazy, bro. How the hell do we not have this number? Dude, they knew this number 3 days ago. All they have to do is press publish. Are they afraid to press the number? Is like JPEL on the phone with the guy who sends the update because he's like, hey, if you press it, you're going to make my life harder at Jackson Hole. This is ridiculous, dude. This is insane. Bay Ray says, oh, I was asking about whose account that is. Nah, bro. You were asking who Bob Ross was. Nah, stop trying to hide it. He's trying to hide it now. He's trying to see like I was trying to say who that account was. Nope. You didn't know who Bob... Dude, if I know who Bob Ross is, everyone needs to know who Bob Ross is, dude. Bob Ross is the GOAT. Absolute GOAT. There's a good documentary about him on Netflix as well. But his videos are on YouTube too, so you can just watch it. Yeah, Kevin just tweeted, everyone waiting for the BLS jobs benchmark revisions, which are late. They must still be in the kitchen cooking. Versus, he means revising. That's hilarious. I guess we're stuck, folks, and we're just waiting here together until we get this number. We have to wait here. Yeah, right here. See, 10 a.m. There you go. 10 a.m. That's the exact quote I saw 2 days ago. 10 a.m. CNBC, they're still waiting for the numbers. Yeah, it seems so. It seems like everyone's waiting for the numbers. Yeah, dude, this is weird. This is very weird. This is very weird, dude. This is like CleanSpark delaying earnings, dude. You could tell like shit's not going to be the best. S&P, it reacted at 9:59, up all the way. Look at that, 560.85. We're almost like 1% away from all-time highs, and then came right back down. It's still green, still above 559, but now I think it's just waiting for the number before it even gives you a reaction. NVIDIA as well. It was always at 128.75. Now it's at 128.40. Palantir was at 32.50. Now it's at 32.34. So the market is still waiting. This is like the Trump Elon interview. Yo, literally, this is like the Trump Elon interview. CrowdStrike deleted the report. Oh my God, dude. This is kind of scary. I'm not going to lie. I'm about to tweet that. Where is the jobs report? It's been 10 minutes. Come on, bro. This is weird. Yeah, everyone. I thought I was crazy for not seeing it. I thought I was on the wrong website. I thought I wasn't refreshing correctly. I was like, what is going on? They really gaslit me into believing. There's no update on the website, dude. There's no update. There's no update on the website. There's nothing. Does AI know? No, AI doesn't know. Or maybe it does, and it's just not telling us. CrowdStrike, by the way, at 273. So CrowdStrike, now it's only down. It's up 0.5% for the month, by the way. CrowdStrike is up 0.5% for the month. Crazy month for CrowdStrike, but it's green. Some intern is getting fired. They're going to have to explain this, bro. There's no way you can get away with this. Imagine the CPI didn't come out at 8:30. Imagine it was like 8:50 and we're waiting for the CPI. Either there is a mistake in the like the deployment of the technology that's like putting out the numbers, or legit there's some nefarious actions going on and we're confused. It's not tomorrow. It's today. It's definitely today, unless they say they're going to push it back. Bitcoin is up, by the way. Bitcoin's up 1.42%. So Bitcoin likes the lack of knowledge around this number. Oh my gosh, my gosh, my gosh. No one has it yet. I still don't see anyone who has it. I still don't see anyone that has it. Oh, by the way, Tesla is going to be at a Beijing conference in a couple months, and they're going to present Optimus there. So that's like good for the humanoid robotics sector of Tesla. So they're going to be presenting at some conference. That news was reported late yesterday. Market jumps at 10 a.m. even though no data is out. Still waiting. We got some people tweeting this stuff. Literally billions are, dude, like literally tens of billions, if not hundreds of billions, are riding on this number right now. Mortgage applications are down 10.1% versus 16.8%, which was the previous number. So obviously people are not applying for mortgages. That's a weekly number. We all kind of know that, so that's not that crazy. Morgan Stanley said target 180. That's their price target. I'm just reading off some random headlines right now as we're waiting. Macy's still down 4%. Walmart selling 3.6 billion of JD. Oh, I do know something we should watch. Did anyone see the Trump interview yesterday with Theo Vaughn? Dude, they talked about cocaine. There's this minute clip. It's the most hilarious thing ever. Maybe we watch that. The person reporting lost their job. Why is Bitcoin going up on this, bro? Why the fuck is Bitcoin moving on this? Like Bitcoin loves this right now. And it's like, we don't have a number. We have no number. That was hilarious, right? Yeah, that podcast. I didn't get to watch the whole thing, but that clip was hilarious, dude. That was great. The fact that he interviewed Bernie Sanders and Trump in the same week was just hilarious. No, 2 p.m., dude, is the Fed minutes. It's not. Trust me, the Fed minutes are at 2 p.m., not the jobs report. The jobs report is always at 10 a.m. Always. Last time we revised down 150,000, that was also at 10 a.m. I remember that. It's never at 2 p.m. unless they put out a delay. But like, if that's the case, then we need to know about that. Vsauce, thank you for the super chat. I mean, this is how we feel when we join your stream and you're late. Okay, fair. That is that's fair. But still, this is ridiculous, bro. This is ridiculous. Where is this? Let me go to CNBC and see where the hell it is, but we still don't have. Job revision is delayed. Rumors jobs will be released 30 minutes prior to FOMC minutes. What, bro? What? Rumor is jobs will be released 30 minutes prior to FOMC minutes? That's insanity. No fucking way, dude. No way. If they do that, we've got some issues, bro. There's no way. That is crazy.
Today, stocks did snap their 8-day win streak. The S&P and NASDAQ now firmly on pace for a positive August. What comes ahead, of course, a host of fresh Fed speak from Jackson Hole and the speech from the Fed chair on Friday. Dave Rosenberg joins us this morning, Rosenberg Research President, to discuss. David, so many moving pieces.
Well, we'll listen to this while I'm still trying to get the numbers, and I'll pause as soon as I get the numbers.
About the consumer. We're waiting for these revisions to come in. Powell, of course, on
Okay, there. So CNBC just admitted we're also waiting. So everyone's waiting for these revisions.
Friday. Has any of it done anything to prod you to tweak your model?
No, not really. Although the QCW numbers just came out, I think it showed that non-farm payrolls in the year to March were overstated by only 676,000. So you know, we always trade off, you know, whether it's retail sales or it's non-farm payrolls or even GDP. The revisions are actually what's really head spinning, which is what really caught my eye at the beginning of the year, which was when the Fed and led by Powell was saying that they were starting to pay more attention to what business contacts are telling them, highlighting the beige book and survey data and the like, which don't tend to be revised so substantially.
There was an interesting tweet out of Bill Gross yesterday in which he posited that what he thinks is going on is you have wealthy boomers and upper middle class folks transferring assets to millennials and Gen X, and that's what's sort
We still don't have it, guys. We still don't have it.
of driving this retail sales growth. Do you think that's happening? He says it could continue as long as capital markets stay healthy.
Well, look, you know, we get carried away always by.
Okay, we'll go back to this in a second, but stocks are dropping. Yeah, everything's dropping. We're going red. We're going red, 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 red. S&P, look at that red candle. 3 of them in a row. We'll see if it catches a bid right here. S&P's red. Palantir just went red. PayPal's red. NVIDIA's still holding on, dude. NVIDIA, I mean, there's a big red candle right there, but it's still holding on to its green. Bitcoin just fell from 62 to 60,200 to 59,600. I don't know why it went up $700 right before the jobs number, but it just went down about $400. S&P 559. It's like 40 cents away from going red. SoFi, wow, nasty 2.85% on SoFi. Goodness gracious, dude. Fuck, that's not good that's disgusting on. So you want to see SoFi at least hold 730. That is bad. Hims down 2%. Robinhood 1980, Robinhood basically flat. Netflix down a little bit. Eli Lilly down 1%. Snowflake green, Carnival green, Celsius is green. NVIDIA, we're at 127. NVIDIA now continues to go red. Oh my God. How is this happening? How is this happening, bro? This jobs report is more late than my first girlfriend when she didn't have her period for like 4 weeks. And I got really scared. Like I got really, really scared. But you know, things ended up working out. So that's all right. Hopefully this jobs report ends up working out as well. Come on, bro. What the hell is going on? Where's the VIX? Where's the VIX? VIX is up 2.7%. VIX is up. VIX is up. You just made that up, dude. I wish I made that up. That week, junior year of my life. Oh my God. You talk about stress. You think holding a lot of options on a stock when it falls 40% on August 5th was stressful? Junior year was stressful, bro. 1 week junior year, or 4 weeks, I should say, junior year. It's pretty fucking stressful. I would wake up every morning, just be like, when am I going to get the text message that I want to see? And then, you know, I got the text. I was at a debate tournament, dude. I won first place at the debate tournament. It was in New York. And I got the text right after they announced my name as like the top speaker. And it was the best day of my life, dude. It was it was the best fucking day. I was like, I was on top of the world. I was like, this is the greatest day of my life, dude. Not many days have compared to the feeling I had that day. Won the debate tournament, and I wasn't going to be a father. So that was awesome. But still, where the fuck is this number, bro? This is ridiculous. This is so stupid. This is insane to me, dude. Like, this is actually insane. S&P 500 is recovering a little bit, got a bit of a green candle, but we are still waiting on this number. Please stop trolling in the chat, dude. Don't say the data's out if the data's not out. Like, I already fell into the lies that you guys said at 9:59 when you said it was 300,000, 400,000. Like, please just, like, can we get some truth in the chat? Because this is stupid at this point. Like, I just want the truth. Plan B exists. Oh, trust me, I know that a plan B exists. All right. I remember being at Walgreens. She was like, do you want the Walgreens brand or do you want the actual brand? And I was like, you know what? There's a $50 difference, but I'm going with the actual brand, not the like. You know, I'll go to ShopRite and I'll get the regular brand vanilla ice cream. I don't need the name brand ice cream. When it came to Plan B, I made a very conscious decision to get the name brand, not the Walgreens brand. So I know about that. Where is it? Oh, do we have one? Do we have one yet? Do we have it? Someone said Mike posted it. Did Mike post it? Did Mike post it? BLS revised the way the person in charge of posting the number. Okay, so he's just joking around. He doesn't have it yet. Oh my God. All right, let me go back to CNBC. Let's wait. I'll give you guys an update in 2 minutes if we get this number.
By the latest data point, and the retail sales number in nominal terms was up 1% for July, but when you look at retail sales volumes on a year-over-year basis, so you smooth.
Okay, someone has it. I hope to God you guys aren't trolling. I really hope. So Cars84 said adjusted initial claims was 227,000, a decrease of 7,000. The previous levels week was 1,000 from 233 to 234. Please, I hope to God you're not lying, bro. I really hope you're not lying. Is the S&P up? Yeah, the S&P is up. Okay, maybe you're not lying. Maybe you're not lying. Let me confirm this number. If it's only 227,000, we're going to have a good day. If it's only 227,000, we're going to have a great day. If it's legit only 227, I hope you're not lying, bro. I haven't seen anyone confirm it yet. We are green though. Market's green. I feel like you're lying, bro. I feel like you're the only reason I believed you is because the market went up as soon as you posted that comment, and I was like, okay, maybe there's some truth there. None of my sources say it yet. Yeah, I don't think that's right. I don't think it's 227,000. Yeah, no one has it. No one has it yet. No one fucking has it. Shout out to getting me on that one. But the market's green. So I mean, like, why did the market just go green on that? That is, where's Amazon's green, PayPal's green, Palantir's 32. S&P's like legit going green right now. Look at that V shape right there. Went all the way down to 559.02, now right back to 560. Tesla's still red. Target's 162. Bitcoin also going green after that like nasty drop from 60,000. VIX just dropped. Did the VIX just drop? Yeah, the VIX just dropped as well, dude. We don't have the numbers, but someone knows something because the market just turned on this. Is the street watching my stream? Maybe, dude. Maybe. Oh my gosh. All right, let's go back to CNBC. Let's go back.
Smooth out the monthly wiggles. It's actually fractionally negative year on year. And I think if that, theory was valid, then, you'd be seeing a lot more demand for first-time buying in the housing market. The first-time buyer has been AWOL, as, of course, they've been crowded out by the super stretched affordability. So you're not seeing, if people are giving their kids or their grandkids money, it's not being put to work in the real estate market. And it certainly isn't being put to work in the auto market, because auto buying by people between the ages of 16 to 24 isn't a full-fledged bear market. So I don't know, maybe they're buying iPhones or they're going to Disney, but you're not seeing it in the big ticket items, that's for sure.
I cannot believe this is happening, bro. I literally cannot believe this is happening. Like, this is a clown economy. Are we in Venezuela right now, bro? Like, what the fuck is going on? How do we not have these numbers? This is supposed to be the most developed, economically prosperous company or country with all the best companies in the world, and we can't release the right data on time. Like, I think they are delaying this until FOMC minutes. But the thing is, dude, like, they can't delay it without announcing the delay. They can't do that. They have to announce it before. And on Wednesday, on Monday, they announced it would be 10 a.m. So if they were going to delay it, they should have said it by now, or said it a couple days ago. So this makes no sense, bro. This makes absolutely no sense. It's at 10:30. It's not. Everyone, dude, I look at a lot of news sources, dude. It's 10 a.m. on Wednesday. Trust me, it's 10 a.m. on Wednesday. Now, maybe it got delayed to 10:30, but any big account on Twitter or even CNBC saying, hey, we're waiting for the numbers, means that everyone thought it was at 10 a.m. But this just, I don't know, dude. This is like very weird. I haven't seen this in a while. I feel like I haven't seen this in a while. But the thing is, they had the numbers a couple of days ago. There's no way they're still cranking the numbers. They had the numbers probably last month, dude. Like they've had this number for a while. It's just a question of posting it at this point. They should blame CrowdStrike. Maybe they should blame CrowdStrike. There's a reason this is getting me nervous, is because if the number is really bad, like I already expected volatility. Now, if the number is bad and then there's a delay of the number, unless there's an explanation for the delay via CrowdStrike or some type of technology glitch, then this is like a purposeful holding of key data that affects billions and billions of dollars in the equity markets, which is not cool. Obese Tomato, thank you for the $5 super chat. Regardless of the numbers, people are going to end up being skeptical with this type of delay. Yeah, I agree. Everyone's going to be skeptical. It's a DDoS attack. Yeah, that's what's happening. It's a freaking DDoS attack. This is so weird, dude. This is so weird. I'm not believing anybody now. I see some of the comments in the chat. I can't fall for it again. So until I get the numbers on my side, I can't believe the chat. I'm sorry. So Bay Ray posted something. I don't believe you, Bay Ray. I'm sorry. I can't believe you. I can't believe it. It's like boy who cried wolf. It's chat who cried wolf at this point. I can't believe it now. I've got to see it for myself. I've got to go on this journey and see if this shit happens. Oh, we got it. Oh, Bay Ray was right. Never mind. You were right. You were right. So unemployment rose 1.3% in the year through March 2024. So what's the exact number? So 1.3%. Wait, what's the number? S&P is green. S&P is not bad. S&P is green. CNBC is reporting. All right, let me go to CNBC. Let me go. No, CNBC is not reporting. CNBC is not reporting yet, or at least not on my side. What's the number? 306? 306? I'm seeing that many times. Is it 306? Let me go Bloomberg. Yeah, let me go to Bloomberg. I think that's the right one. Yeah, I think that's the right one. Holy crap. If that's the case, dude, if it's 300. Oh my gosh. If it's 306, that's great. This is so amazing. This is so incredible. If it's 306, I think, yeah, here we go. It's 306. It looks like it's 306, baby. It looks like we are good. We are good. Let me go to Bloomberg real quick, and then we'll get into it.
Year, and it's for prior months. So there's a difference between the two things. But you're right. Everybody is focused on the revisions. Now, historically, this tax-based revision, this once-a-year revision, has suggested both gains and losses. As I mentioned earlier in the show, the biggest number we've seen in a while was 2019, when jobs were revised down by 500,000. Since the pandemic, it's been.
It looks like it's 306. It looks like it's 306. Hold on, I'm trying to get. Someone said 306 for each month. Okay, now you. That'll be like 3 million. If it's 306, market's flat on that, which is good. Flat to slightly green. Let me get the exact number right here. I think you guys are right. It is 3. Yeah, I think Bloomberg's right. 306. Unemployment went up 1.3%. That's not bad at all. If that equivocates to 306, then we are good, bro. This was a nothing burger. It doesn't look like there's another. I'm trying to get the exact website. I think you guys are right on this. I have a couple accounts reporting 306 as well. So I think it's 306. I'm trying to get a definitive source before I officially say 306. Yeah, right here. Fox says 306. So Fox got 306,000. Fox got 306,000. Fox News. That's where we're getting the number from. Fox News. 306 is last year. Yeah, but guys, remember this is for 2023. So I believe it's supposed to be for last year. The whole point is revising it from last year into this year. That's what it's supposed to revise for. Meet Kevin says. Oh, Meet Kevin says 306 was last year. Oh, it was released on August 23rd. Oh, crap. Then we don't have the fucking number. Oh, I see what your guys saying. It's ending on March 2023. Oh, my God. Thank goodness I didn't tweet that shit. This is why I need the right source. So apparently Oh, I see what you're saying now, guys. Sorry. I thought you meant... the reason I'm thinking last year is because 2023 to 2024, so we're factoring in last year. You guys are saying the number was actually reported last year. All right, so even Fox got this wrong. So Fox ended up manipulating everything. So but S&P's, there's a green candle right there, but I don't believe it right now. NVIDIA is green, Tesla's green, but I don't believe it because we still don't have the number. We still don't have the number. 1.3% is the actual unemployment revision, but we don't have the number of what that means from 1.3. Holy fuck, dude. I cannot believe this is happening. Yeah, the Fox is from last year. Sorry about that. Fox is from last year. I'm sorry. But all of you were typed 306 in the chat, so I started to feel like, all right, it's finally official. So, like, if anything, this is definitely chat that cried wolf, dude. If I fell for it, I'm looking at like 50 comments as I'm scrolling up in the chat. Everyone's saying 306, so it wasn't just me. We all fell for this shit. Oh my God, bro. Oh my God, dude. I cannot believe this. I legit cannot believe this. I just can't. I just can't. CNBC, they're talking about natural gas, dude. They don't even have the numbers yet. Bloomberg was reporting the 1.3 number, but they weren't reporting the 306,000 number. But if it is only up 1.3%, maybe it's like less. It feels like it's less than a million if it's only up 1.3%. It's been 30 minutes. Yeah, it's legit been 30 minutes. It's legit been 30 minutes. This shows him it isn't a gamer. Never trust people online. Well, no, usually you guys are good in the chat about earnings and about like numbers. Like usually you guys have it even before I pull it up because, you know, when you have 100 people that get the number, you can easily get it quicker. But still, like this number, no one has it. No one has it. Wow, dude. This is crazy. It's been 30 minutes. This is unacceptable, dude. This is not real. This cannot happen. U.S. unemployment rose 1.3% in year through March 2024, but we need the actual numbers. By the way, Buffett, after the market opened yesterday, he sold 14 million shares of Bank of America, if anyone missed that. So he's raised another 1 billion of cash, and now he's closing in on $285 billion of cash, which is insane. He sold 4 billion of Bank of America in the past 3 months. So Buffett is still raising cash. But yeah, numbers are still not out. Numbers are still not out. Do you know what they call a Big Mac in Paris, Amit? I don't know that. Please let me know what they call a Big Mac in Paris. 1.6 million, Amit. See, I'm not going to believe this. I can't believe it's 1.6 million. Like, if it was 1.6 million, we would see the S&P collapse right now. I don't think we're seeing that. Is Jackson Hole during market hours? Yeah, I think Jackson Hole is at 2 p.m., 2 to 2:30. It's not 1.6, dude. It's not 1.6. This is the modern day like fake news misinformation problem that we're going through as a society. Like no one knows what the fuck is the truth. But I'd rather have that than have a monopoly on information. Like I'd rather have democratized media versus like the New York Times controlling the flow of information. Now, the side effect of not knowing the truth sucks, but it's better than, you know, one party controlling the way people think of the news. But we need the numbers. We need the numbers. We need the numbers. I don't get the reference about Paris and Big Mac. No, I don't get the reference. I don't get the reference at all. I don't get it. I'm sorry. Oh, it's a Pulp Fiction reference? Really? Yo, I mean, look, I don't want to say this. Oh, S&P's collapsing. I was going to say, I don't think Pulp Fiction is that good of a movie, but okay. S&P's collapsing. Just went from 5. Look at that red candle. There's the red candle. Do we finally have the number? It is 1032. Do we finally have the number? Come on, bro. It's 1030. There is a nasty red candle right there. You would expect that to be a reaction to something. Wow. We still don't have it. I don't know what it's reacting to. We don't have it. We don't have it. We don't have it. Oh my God. Yes, Pulp Fiction is not that good of a movie. I'll say it right now. It's too complicated. Like I watched it 3 times. I still don't understand what the hell the plot is. Now some of you may say that's amazing screenwriting. I would say that's wasting my time. So yeah, not a big fan of that movie. 818. Okay, everyone's saying 818. I am not going to believe it until I see it. I'm sorry. I love you guys. I'm just not going to believe it until I see it. I do think you guys have a chance of being right because the S&P just went down. You guys are saying 818,000. I need to see the number to believe it. I'm sorry. I'm sorry. I got to see it. I got to see it. Where did you guys get 818 from? Where did you guys get 8? Is that from Fox News again? Like, where did you get this number? Okay, everyone's saying 818 on Twitter as well, but I'm waiting for the right accounts to post it so I know for sure. BLS website. I still don't have shit in the BLS website. Let me go to CNBC, see if they have it. Do they have it? No, they don't have it either. They don't have it either. Fox News 818. 818 is bad, dude. 818 is bad. It's not a million, but it's bad. But the the S&P just went green, dude. The S&P doesn't care. Either 818's right and the S&P doesn't care, which is great, or the S&P doesn't believe 818 and it just doesn't give a shit. Where did you get 818 from, dude? Where did you get that? You guys are saying Fox News again? How did you even say? Do you guys have a separate group chat, like the Amit live stream group chat, and you guys are planning what number to just spam in the chat to fuck with me? Like this is ridiculous, bro. Okay, so it's not 818. Now you guys are just trolling. That's just ridiculous. Oh my god. I just want the number. Look at this tweet, dude. Look at this tweet. This is hilarious. This is hilarious. Live look at the Bureau of Kitchen Statistics. Oh my god. This is crazy, bro. CNBC's website doesn't say 818 either. CNBC was reporting about that yacht story yesterday. I don't know if you guys, there's a billionaire who disappeared on a yacht. I don't know if you guys followed that, but that's the story they're reporting on right now. Ford is delaying their new EV plant. They're canceling 3 SUV EVs, 3 electric 3-row SUVs. It's on CNBC TV. Okay, let me go there. Oh, I think we have it. Yeah, 818. They're reporting that 818. They're reporting it 818. Okay, let's go to it. Let's see.
52-week highs here. We have a very broad advance. Urban Outfitters all strong. By the way, Walmart, TJX, Ross stores, all-time highs here. Burlington also 52-week highs. So there are consumers in that. There is a
provisions. Let's get to Rick Santelli. Hey, Rick.
Yes, you know, the range of how many jobs they would take away for a variety of reasons. Maybe the largest is the birth-death model for business.
Bro, the market doesn't care. Market's up.
This was going to be somewhere between 350 and 1,000 and 1 million. It comes in at 818,000. Now, this is a preliminary benchmark revision by the Bureau of Labor Statistics. The actual final revision will be in February of next year. And as you look at intradays of 2-year and 10-year, look at the amount of volatility, especially in twos, most closely associated with the Fed. It's been down as low as 392. It was up as high as basically 4%. Also volatility in the long-dated treasuries, but not nearly as much. Why is this such a big deal? I'll tell you why. Because the handoff from what the Fed is looking at, from basically an inflation-driven notion of a trigger to ease to a weakening labor market. Well, if in one fell swoop, we just took away 818,000 jobs, what does that mean for the foundation that the Fed built its keep rates higher for longer house on?
Well, I'll tell you what it means for the stock market. The stock market doesn't give a flying fuck, bro. Oh my goodness. Take a look at this. S&P 500 at 561. That's up almost 0.44%. Target's up 13%. Tesla's at 222. NVDA is almost at 129. Palantir back to 32.50. Robinhood trying to close in on $20. Dude, the market doesn't care. It seems like the market thought it would be 1 million. 818, last time I checked, is lower than 1 million. Robin in 1995, the market doesn't care. The market's green. The market doesn't give a shit. The market does not care. You are not stopping this bull market. You're just not stopping it. Oh my gosh, dude. If 818,000 jobs to the downside can't stop this, what is stopping this right now? What a performance by the S&P. We'll go back to this and we'll get back to the markets. Wow. This is incredible.
And I've been talking about this. Traders for most of the last year have thought these numbers have been running rich. We've all seen revisions. This goes above and beyond that. So 818,000 is the number. It's definitely on the high side. And I would look for this particular data point to most likely put the session lows and yields in for the day. And don't forget, we still have a 20-year bond auction at 1 o'clock Eastern that may get affected by this news. Carl, back to you.
We were just talking with Bob here at the desk, Rick, about some of the estimates about this revision. I know Goldman was somewhere in the 600K to 1 million range.
You could drive a truck through
Which
that.
is
Thank
pretty
you very
wide.
much. Which, by the way, 800,000 is exactly in the middle of their estimate there. So I'm not sure this is terribly much out of the range of what people were expecting, given how difficult it is to forecast these kinds of.
Comes ahead of Fed meeting minutes tonight.
Yeah, and I don't think we're expecting too much from that. The sense here on the floor is everybody is expecting Powell to lay the groundwork for rate cuts, to talk about job growth, still there, but slowing down a bit. The economy's still strong, but slowing. It's that Goldilocks scenario that I think people are still anticipating to hear from Powell. So far, I haven't heard anything here, including these revisions, that would indicate he's going to say something that's dramatic.
Dude, the market doesn't give a shit. Holy crap. Is Meet Kevin upset about this? Is anyone in the stream? Is he upset? Look at this, bro. The Bitcoin is up a little bit. S&P's up. Robin is trying to get to 20 bucks. Tesla's up. You would think if we lose 818,000 jobs revised, the markets would like not be happy with that. Even I was wrong on the beginning of today's show. I said, I think we're going to have some pain. I said that. I said, I don't know how the market digests. And now I did give the potential way the market doesn't care about it. But my gut feeling was that I have money to buy the dip because I think we're going to get somewhat of a dip. Wow, dude. And again, the reason, so yesterday in the market close, we talked about the bull case for the market not caring about that. And it's very simple. It's actually not that complicated. 818,000 jobs, even 1 million jobs, does not increase unemployment at 4.5%. Right now we're at 4.3. And it does not decrease the amount of jobs available per unemployed person. We looked at that chart yesterday, which is 0.8 versus 0.6 on a ratio, which is good. C, it doesn't stop rate cuts. It only accelerates rate cuts. Like, if anything, it makes rate cuts more likely, which is good for the broader economy. And that probably re-stimulates the companies that were firing too many people to start hiring more people. So there was a very easy bull case to make. My perspective was just that, hey, I think the market's going to be really upset when they see that number. But it's not like this can't be bullish. It's not like this can't be bullish. So for anyone who's saying, oh, this is the market being stupid. No. This is not the market being stupid. The market is pricing this in. They're looking forward. And 818,000 jobs, as bad as that is, that's not like 5 million jobs, right? There is a bright line between how bad does it get before the consumer starts being in a bad position. Also, the fourth point I forgot to mention that we talked about yesterday, if the consumer is strong, 818,000 jobs, the downside is not stopping the consumer from spending. So there's your bull thesis. Like, it's really not rocket science. You put those 4 numbers together, or 4 data points together, pound you at 32.56. You can come up with a very easy way to believe that the market can digest this. S&P is about to go to 562, bro. S&P is barely 1% away from 565 all-time high. There's an easy way to make this a bull argument. Easy way. This makes a lot of. Was Meet Kevin short? I don't know if he was short. I know he's been bearish. I don't know if he's literally short. But he's definitely not happy about this. I wouldn't imagine he's happy about this, dude. There's some other, there's other bear accounts, not just Meet Kevin. There's a lot of bear accounts I follow because I want their perspectives. They were pumping this jobs revision is going to be a really bad thing over the past couple of days really hard. Just like, I wouldn't say fear mongering, but definitely like reaffirming their bear thesis with this jobs revision. They were saying, hey guys, Wednesday, 10 a.m., shit's going to hit the fan. My perspective was, yeah, that could happen, but that also could not happen. S&P right there, 562. I tended towards, hey, we're probably going to see some volatility on that. I don't think it's a cataclysmic. That's why someone asked yesterday, should we buy puts for tomorrow? And my answer was like, no. Like, I don't think this is something you hedge for. When someone asked me and Jason, do we buy puts tomorrow? My answer and Jason's answer also was like, hey, you don't really need to buy puts, but if you have some cash ready to buy the dip, then yeah. And that's why I didn't buy the dip yesterday, because I was like, hey, if things get bad today, we'll just buy the dip today. But I'm more than happy not buying the dip and letting this shit just play out. Now, if you sold everything yesterday because you were afraid of a jobs revision number, which is why some of these bear accounts, you have to make sure you follow some other accounts if you're following the bear accounts, because they'll make you think the sky is falling. Like, they will legitimately make you think the sky is falling, when in reality, like, no, dude, like 800,000 jobs is not the sky falling. It's bad. It's not great. And definitely makes me trust the government a lot less, but it's not like the sky is falling. This is good, dude. This is really, really good. This is not bad at all. Today is still a dip in the perspective of a year. Well, yeah, of course. But I mean, like I was thinking we would get Robinhood back at 18, dude, or like low 19s. That's what I was preparing for. Like, I was going to buy it yesterday at 1970 because, I think it's closer to $25, $30 in fair valuation. So I wanted to buy more. But I already bought a lot at 17. I was like, you know what? If we hit the high 18s tomorrow, and I didn't think it would be a big dip. I just think it would be such an irrational move by the market. They would be like so afraid that the numbers were down that it would just give a good buying opportunity. Not an August 5th buying opportunity, but it would create somewhat of an opportunity. That's what I felt going into today. And the market has basically said, nope, you're not getting that opportunity because we don't give a shit about this jobs number. We do not care. We do not care. That's what the market said. That is what the market said today. This is great, dude. This is great. You know what this reminds me of? Let me play this. This is what this reminds me of. This is the this is what this reminds me of. All right, ready? This is what happened, right? As soon as the numbers come out, this was this was the market's reaction. You ready? You ready for this? Here we go. Here we go.
I'm here to tell you right now, we don't care. Let me tell you, we don't care. Jerry.
That's what the market said, bro. They didn't give a shit. They did not care. Oh my gosh, they did not care. They did not care. Look at the S&P, dude, up 0.5%. Let's get back to CNBC and then we'll keep going. But the market did not care. This is great. This is great. Absolutely great. This is what we want to see. This is what affirms a bull market, bro. When the market can't go down on this type of data, it means there's too much growth priced in. There's too much demand priced in from the consumer. And there's too much momentum priced into rate cuts. Seems like the market wants to go higher.
Rick, does the bond reaction tell you anything material about that print?
It really doesn't tell me anything material about it. I think the volatility is what tells me the most, and the fact that benchmark revisions this time of year and in February are mainstays in the Treasury complex. But I've never seen so much attention paid. So I guess really to answer your question, it really does have potentially big implications as we go into Jackson Hole and see what some of the Fed personnel think about this revision. And it really does have to play havoc a little bit with how they want to proceed. In my opinion, there's many things about this that pretty much cement the rate cut in September if it wasn't already two bricks stuck together already.
Dude, that's the other thing. Okay, so what we're gonna do right now, we're gonna write out why this makes sense. I'm gonna write it out on Twitter and speak it to you guys in front of you because we got to get this thought out. So here we go. Let's get this out. Why the market doesn't care about losing 818,000 jobs. We're going to make it simple. 1, 818,000 jobs is bad, but it's not 5 million jobs. This is not pushing the unemployment rate significantly higher. Therefore, the broader markets aren't pricing in a deteriorating labor market. Okay, so that's the first thing. That's how you go bullish on this from that perspective. We'll figure out how to spell deteriorating in a second. Okay, here we go. Here we go. Then the second point why this is bullish, losing 818,000 jobs only makes a rate cut more likely because now the Fed has confirmation that the labor market is actually weakening and would want to stimulate the market with a minimum of 50 bips before we see a deteriorating labor market. Okay. And then what was the other reason we talked about? We talked about the consumer, right? We talked about the consumer. Even if we lost 1 million jobs, companies like Home Depot, Target, Walmart, Lowe's, and Costco raised guidance for Q3, meaning they feel the consumer is still in a strong position and the market ultimately cares about earnings growth. Earnings growth, which depends on the consumer. If we lose 1 million jobs, but the consumer is still strong, the market doesn't care. The market doesn't care. There you go. There you go. And I think there's one more take here that we have to talk about. Mid-spelling is deteriorating. S&P now, a little bit of a red candle there, but still green on the day, which is good. So again, we're seeing stocks have some red candles, but not to the point where it's going naturally green. It means rate cuts? Correct. It means rate cuts as well. Again, guys, the market selling off to me is not. This is. I expected the market to go down 2% today. That was my expectation. Seeing a red candle right here up from 562, that's nothing to me. That is absolutely nothing. This jobs report, 818,000 jobs. We needed this thing to go red. I don't think we're going red today. At least that's not what it's looking like right now. Now, look, maybe that changes throughout the day. I don't think that's going to be the case. But if the immediate reaction to that data is, hey, we're going higher, and now it settles in or at this 560 level, Palantir, look at Palantir, it went from 3250 to 3243. I mean, individual equities, Robinhood went from 1990 to 1985. This is not, to me, a sign of going back down to 555 or 540 on the S&P. At least that's not what it's looking right now. Matt Money says market will be down tomorrow. Yeah, the market might be down tomorrow, but on this reaction, the market's good. The market is not really feeling the type of the pain that it's seeing right now. Not an indication of a labor market weakening. It was already weaker than reported. Well, that's true. I mean, that's true. It was already weaker than reported, but that just goes to show that the Fed's assumptions around the labor market weakening. And remember, Goolsbee, Fed president, came on the other day and he said, hey, labor market is weakening. We can't remain too tight for too long. This number only confirms to them that the labor market is going to continue to weaken. Or it not continue to weaken, but continue to weaken, and it is weakening, right? So there is no fear at that point that the labor market can't get any worse. Robinhood sub 20 is a buy. Yeah, I like Robinhood at sub 20. I really loved it at 17, but sub 20 is not a horrible situation. They are smart. They lowered expectations yesterday, talking about 1 million revised. Yeah, I agree. I agree as well. I mean, they lowered the market expected 1 million jobs, came out with 818,000. NVIDIA still at 128, Tesla at 222, Palantir 3234. Definitely lower than expected. SoFi getting a little bit of love. SoFi was at 716, now it's at 721. IWM at 213, QQQ at 481, Lowe's at 241, Intel at 2122. Again, we're seeing a red candle here. We've got to see like legitimate red on the S&P. Just because the S&P is coming down from being up 5 minutes ago, I mean, that's like a natural sell-off. People are going to take profits right there. You want to see the S&P close red on the day and go down about 0.5% to 1% to see them really care about this data today. Maybe that happens. But as of now, it does not seem like that's happening. Meet Kevin just bought November calls on Snowflake. You know, I actually think he'll do well on those. Because I think Snowflake's going to pump today. But let's see. 818 is pretty bad. 100% is pretty bad. I agree. Of course it's bad. It's just I don't think the market cares as much as everyone, or as much as everyone thought they were going to care. Again, remember, dude, 818,000, as bad as it is, it prices in cuts further and further and further. And if you believe cuts are good, and again, Liz Young talked about this today, either cuts are reactionary or they're proactive. And if it's proactive, that's good. If it's reactionary, it's bad. I don't think 818,000 means the cuts will be reactionary, because I think the cuts are coming no matter what at that point. Let's see. Maybe shit hits the fan. Maybe we definitely go super red. But I wouldn't judge it from 562 to 559. I wouldn't. That's just the natural pump that I think people sell off. I would judge it if we close at 555 today, or 554 on the S&P, or if NVIDIA closes at 123, at 127. Like, that's what I would judge it. I wouldn't judge it on the pump on the news red right after that. Like, that's silly in my opinion. Now if we go red for today, that would suck. That would definitely suck. But let's see if that happens. Let's go back to CNBC and then we'll keep going from there. We'll be on for like another hour. Let's see how the market ends up reacting to this, and if we actually get some downside momentum. But as of now, it seems like the market doesn't care too much.
Hey, Bob, just coming back to the broader market, everybody's got their statistics they can cite for why the rally will continue. One is that every time in the last at least 5 times we've had an 8-day winning streak. Yeah. We've had a very strong year overall in the market. And we are, up 18% on the S&P, the possibility of back-to-back 20% years. Just wanted to get your thoughts.
Extremely unusual. Again, the historic average for the last 100 years is 8 to 10% gains with 1 to 3%. And that includes 1 to 3% dividends that are in there. So you can figure average numbers, 6, 7, 8% gains on the year, excluding dividends. 20% year, I can get you the numbers, but that occurs fairly rarely. Just like a down 20% year occurs fairly rarely. The market goes up 75% of the time. 3 out of 4 years, the S&P 500 rises. This is why long-term investing works. This is why it's not a casino. Long-term investing, you're almost guaranteed a real return. 20% back-to-back years. I'll get you the stat on that. I don't have that one, but it's very rare. It doesn't happen very often. Still, when you look at what's happening right now, the fact that you have consistently been wrong in expectations of a recession. We have been waiting for 2 years now. We're coming up on the 2-year anniversary of the recession we thought was going to happen and still has not happened. We're still seeing strong economic gains overall. The Atlanta Fed GDP is 2.9% for the third quarter. That ain't anywhere close to anywhere recessionary. And I don't hear anything about, sub-recessionary numbers or recessionary numbers for the fourth quarter either at this point. So what happens is when you have earnings that are expected to be up 10% a year in 2024 and 15% in 2025 and have not changed appreciably, nobody is taking those numbers down dramatically, along with reasonable GDP growth. My heavens, you don't have to be a genius to figure out that you're going to get an up year, rather notably. Whether it's going to be 20% or 15%, that's subject to debate.
Okay, so S&P is still green. It's holding on by a thread. VIX has come down, but broader market still slightly green. So S&P, as you can see right there, it's like, it's holding on to the green candle by like 5 cents. Bitcoin is basically flat right now. Robinhood is down about 0.6%. NVIDIA is still holding on 127. Amazon 179. Palantir is red. So yes, we are seeing some red from the top at 562. My question now is, how bad does that get? How red does that actually get? And where do the green candles come in? So as you can see right there, you see this green candle that's forming. That's because as soon as we go red to where we opened at 930, you start to get some momentum right there, or you start to get some buyers. When that green candle goes red and we break below 558.7, call it 558.2, that's when we're probably going to see a little bit downside if we get into a downtrend. But the VIX is not up. The VIX is up for today, but I'm saying the VIX is down. The VIX was up 3%. Now the VIX is up 1.5%. So the VIX is down from where it was at 930 is the point that I'm trying to make. I don't know, dude. I think we're nitpicking too much from the drop at 562. I really do. I think this is nitpicking. From 562 to 558 to say that's a dump, I think that's nitpicking. I think that's a pump on good data and then a sell the news. But that's not the market thinking, oh my God, 818,000 jobs. We're in a bear market. It's time to sell off everything. Like, what's red? What's seriously red? What, Tesla at 221? That's flat on the day. That's the market reaction. Palantir, that's already up 50% in the past week. That's at 32.23. That's down 40 cents. That's the reaction. I don't believe it, dude. I think judging this 562 to 558 is too nitpicky. And now look, if we went to 565, that would be crazy. If we went to like 565 and then dumped all the way, I would get it. But this was like a 2-minute pump that went red and is still green for the day. So I don't know if that's necessarily broader market in a horrible situation. I just want Rocket Lab back at $5. Where's Rocket Lab? Right. Yeah. Look at Rocket Lab was down almost 6%. Now it's down 1.65% on the day. Rocket Lab was down 4% at 940-ish when we looked at it. Now it's down 1.65. This is not even a dip day, dude. Robinhood's at the same price it was. I was hoping for Robinhood at $19 or $18.50 today. That's what I thought the volatility would be like. That was my personal expectation. Why? Because Robinhood is contingent on the market. If the market takes a dump, Robinhood's definitely taking a dump, right? So my perspective was, all right, market takes a dump, I'll get to buy more Robinhood. Robinhood's not taking a dump because the market's not taking a dump, and the market is still green, at least the S&P. Now we'll see what happens. We still have a couple hours. We have the Fed minutes at 2 p.m. That honestly, I think that's actually going to be not the worst because they're probably going to discuss the rate cuts in the minutes, and that's going to be bullish for the markets. But to judge 562 to 559 as bearish, no, dude, I don't agree with that. I know some of you in the chat, I do not agree with that. I think that's just a basic sell the news off of good data or like data that wasn't as bad. And now we're back to normal. We have the bond auction as well. Yes, we have the bond auction as well. In general, bro, you got to understand my perspective. My perspective was, I said this yesterday with Jason on the market close, and he was shocked when I said, dude, I think we can get down 2%. I was just like, I just feel like the volatility is going to be, I feel like 818,000 or 1 million is so large that the market's going to look at that number and be like, holy crap, things are bad. And it's going to stupidly sell off. And that's where I would buy the dip. That was my fantasy game plan for today. That did not happen, even though we got a number that was pretty aggressive. And the reason for that, I think, is because of the points we talked about: consumer spending, guidance still being good, unemployment not going up to 5%, like all those things the market kind of priced in and just moved on from. So I still think soft landing. If the market can digest 800,000 people not being employed when we thought they were employed, and how that has ramifications for GDP, consumer spending, CPI, etc., and still say, yeah, we're not going to really move on that, we're not going to really move to the downside, I think that continues to put people into the camp of a soft landing. Palantir will dip down to 25. Well, if Palantir goes down to 25, it's not because of the macro, in my opinion. If Palantir goes to 25, it's because it's one of the most expensive names in software, and people want to take a lot of profits, and institutions start selling. Now, could the macro take it to 25? Sure. But I think Palantir, if it drops down that low, it's more because people just don't want to pay the premium. The good thing we've seen about Palantir, it's been almost 2 weeks now. Like literally by Friday, it'll be 2 weeks that we've been at $30 a share. The last time we were not at $30 a share was last Monday when we closed at $29.30. Every single day since last Monday, we've been above $30, and many of those days above $31. So I think Palantir's doing a good job normalizing this as well. And this jobs report was not enough to take Palantir down either. And I mean, think about it, dude. Palantir is the most expensive name in software. Macro data that's bad should hurt the most expensive name in software, because the multiple expansion on that name should get compressed if the broader economy is struggling. If Palantir can barely go down 10 cents today, based on this data, it just feels like this data is not as bad as what some of the bears may think it might be. Fubo's holding up. Yeah, like Fubo should not be up 6%, dude. On a day where we lose 100 or 818,000 jobs, why is Fubo, which at the end of the day is a very speculative small cap, why is that up 6%? Like, these are the stocks that are supposed to get destroyed on really bad economic data. IWM is still green, bro. Small caps are still green. They should not be green if we have such bad data. The reason they're green is probably because that data signals a rate cut. But if the data was so bad that a rate cut wouldn't even overcompensate for the data, you would see this stuff collapse, because that means we're in a recession. I don't think that's the case. It doesn't seem like that's the case. Michael says, I don't think we'll ever see Palantir below $30 again unless some black swan event or macro change. No, so I kind of disagree with that. I think we could see Palantir below 30. I don't think it's likely because there's so much dip buying ready to buy it up. But I do it like at 30, like it could definitely go back to 27, 28. I think it's very possible. I don't think it has to happen, but I think it's possible. Now going below 20, yeah, I agree. I think that $20 level we had in August 5th, that was probably generational buying. Unless we see a nasty recession in 2025, we're not getting below 20 again. And we didn't even get below 20. We got $20.69 on August 5th. So below 20, I don't think it's happening. Below 30, I think it's possible, even though it's going to be hard because the dip buyers will come in. Michael says, I hope we see Palantir below 30. Yeah, I think a lot of people do. I think they will get into that dip. But I do agree that covered calls, we were talking about this yesterday on Palantir right now, is just a little tough if this thing keeps going up. All right, let's go back to CNBC. Then we'll keep analyzing how the market goes. We'll be on for like another 30 minutes. Markets are still green, folks. They have not gone red. Some individual stocks are down 0.5%, but broader markets holding up on some tough data we got this morning.
Tail end the whole AI game here. Yeah. That's another issue.
Well, your point has been that even if you took out Mag 7 this year, you would end up with one of those average years.
We'd still be up about 10%, yeah, on the year. So this is why people stay long the market. This is why it's very difficult to do market timing. It's very difficult to pick sectors. This may be the top in the AI story. I suspect it is not. At least it appears to be in the last few months. It's looking slightly toppy, but long term, who doesn't believe that the AI story is going to change everything?
Speaking of tech, 1 week away from NVIDIA earnings, we were putting together the data that looked at how NVIDIA has reacted post-earnings, Bob. 5 out of the last 6 quarters, NVIDIA has gained about 10% the day after reporting earnings. So even this time around, with questions around a potential Blackwell delay, expectations are pretty high going into this report.
Right. So the question here is the echo gets a little smaller each time they do it. I would anticipate a very nice earnings beat of some kind. But remember, the last 2 years, NVIDIA's numbers went up so much. It was so shocking, that AI move that the play that they had, that the market really had to play catch up. And I think the market already is anticipating these kinds of beats. So I think you're going to get very important comments, but I don't think you're going to get the same sudden move to the upside that you had in, say, 2022. in 2023.
All right, stock at 129 a share.
Stocks have added to gains actually since that revision, now 56.30. We'll take a short break, talk to Leisman on the other side about what it might mean for the economy and markets in a minute.
People off of payrolls who actually were on the payrolls. I guess that's a debate for another day. Net, I think that when you see that the payrolls have been revised down, they were slightly less hot than they were. That's somewhat dovish, but I'm not sure how much signal to take from this. It's a big number. I think it'll be played politically by both sides a little bit, or certainly by the Republican side, suggesting there was more weakness in the jobs market. But still, you ran 200,000 or so over that time period. And you ask yourself the question, was the Fed too hot or was the Fed too tight during that time? Probably not. If these numbers had come out at 200,000, I think the Fed would likely have pursued the same process. Does this mean they should be lower now? I'm not sure they should be much lower, but net, if you ask me, what does 818 downward on the payrolls mean? Argues a bit more for a 25 than a 50, but the contemporary data will be much more influential.
Steve, as we count down to Fed Chair Jerome Powell's speech on Friday, how do you think this piece of data informs what he says about the jobs market? And now we've seen 4 consecutive months rise in unemployment.
I think that's right. I think that's a significant factor, and there'll be some discussion about the issue of unemployment and how much it's gone up, and whether or not we're back down to a more normal, what they call the beverage curve, which is the relationship of job openings to unemployment, and it's now down to 1.2. It had been as high as 2. So we are getting closer to a normal job market. That's going to argue, I think, for the Fed to ease rates. And the question being, really it's not an if they do, but how much they do. And I think it's likely a 25 at this point, but we do get another payroll report. Jobless claims have been running 235. I think the Fed will take more signal from that than the 818 now. But this will argue that the job market was not quite as tight as they previously were. And I think the Fed will be thinking a little bit about this immigration issue, which has made it difficult to figure out how many people are on payroll. So they'll be
Guys, S&P is still green, man. S&P is still green. We are still holding green. And it's up 0.14%. Like, you had your dip right there, at least today so far at 558.7. That's when it went red for like 30 seconds. And now you're back to going green. And if we see 560 in a little bit, then, I mean, that's going to be really awesome price action for the S&P. Tesla's back green. Target's still green. Amazon's green. Amazon was at 177. That was your dip if you wanted Amazon today. So far, maybe things change, but so far, NVIDIA was at 128. It hit 127.20, up, down from 129. Now it's back at 128.2. Like, regardless of if stocks just stay flat for the rest of the day, even Palantir at 32.27, it was at 32.15 just a couple minutes ago. Like regardless of if we stay flat, this is not a reaction to the downside that is dramatic. Now, maybe those minutes when the Fed releases them at 2 p.m. changes things, but I don't think there's going to be anything substantial in those minutes that necessarily change things. I don't know, man. I don't know. I think the jobs report was just not that bad. Look, I agree. Let me rephrase that. 800,000 jobs is really bad. That's like 60,000 jobs a month. I get it. It's bad. It's just the market's reaction to it has not been that bad. And again, if this is what people are concerned about, 562 to 559, I just don't agree with that. That happens all the time, dude. The market, like, that happens on CPI day. The market will pump up to some artificial number and then get sold off, even though the CPI data was less than 3%. That happened 2 weeks ago. Like, this, to complain about this, if this is the thing you're complaining about, I don't know, dude. Unless you bought some calls right at 562, this is not something to complain about, in my opinion. If this kept going down and we actually were red, 556, 554, we like legit saw 0.5% down, 0.75% down, then I get your point. But we're holding so far green for the day, which is not bad. Traders are definitely doing that. I agree. Traders are definitely doing that. What else do we have? VIX is up a little bit. It was down. VIX just went up. Okay, so VIX is now up 5%. So this is something that is a little concerning. VIX is up. Granted, we did have a ton of selling from 562 to 559 on the S&P, so I would imagine that's why it's up. But it's at 5.42. It was up 1%, 1.5 like a couple minutes ago. Now it's at 5%. So we'll see if that impacts the market at all. Where's SoFi? You're saying SoFi is being dramatic? Why is SoFi being dramatic? SoFi, yeah, SoFi still down 3%. Yeah, okay, so I thought SoFi would pump. Did SoFi pump at all on this? Yeah, it pumped to 750. Did it? No, that was yesterday. Sorry, that was yesterday. It pumped to 744, and then it fell to 713. So on the jobs data, it pumped to 744, and then that was at the morning. It pumped to 729 at 10:45 when we finally got the jobs data. Now back to 718. But see, SoFi was already at 713 before the jobs data. So SoFi was already in a downtrend today before we got any real jobs data. Hood futures trading dropping soon. It's showing up in the app. All right, not bad, dude. I think October. I told you guys yesterday I got invited to the Robinhood event. I can't make it because I'm going to be in India. But the index futures and web trading app I think is going to be launched by end of October, early November, and I think that's going to be really exciting for Robinhood. Really, I was on the phone yesterday with my cousin from India who has a job in California. She works at a tech company, and I was just catching up with her. And she was like, she was talking about stocks. She's like, yeah, I bought some Palantir because I know you always talk about it. And I was like, okay, what'd you buy it on? And she's like, oh, I use Robinhood. And I was so happy. I was like, really? You use Robinhood? I was like, why do you use Robinhood? She's like, it's so easy to use Robinhood. And I was like, hey, you need to consider buying some Robinhood stock. She's like, really? Robinhood? I was like, yep, this is why. So she's in Palantir. She's in Tesla. She has a little bit of NVIDIA. Now she has some Robinhood. And she's using the app. And it's super easy for her to use it. So again, I just think the momentum on Robinhood is not going anywhere. Are you still going to be live while in India? Yes, I'm going to be live. I'll be live in the mornings, but not in the afternoon. So unfortunately, we're not going to be able to do the market close because it'll be 2 a.m. India time, but the market open will still be there, which sucks, dude. I really don't want to take a month off from the market close. Like, that's really annoying, but there's just no way I can do the market close. There's just no way. But market open, that should not be going anywhere. But anyway, yeah, she really liked using Robinhood. So I think it's appealing to everybody. And she's not really a stock person. She's just getting into stocks because of she's seen some of my videos and stuff. So she's interested in it. But Robinhood was the easiest place. And she's getting 1% on every dollar. I told her about that. Dude, I posted about that yesterday that you get 1% on every dollar. And I posted about it on Twitter. And this is how I know there's still so much alpha in Robinhood. There's so many, I don't want to say anything mean, but so many people that didn't understand how Robinhood does this. And even when you explain it to them, they're like, oh, this is a scam. It's like, dude, you're just stupid. Like, I'm sorry. And this is good because that means you're not going to buy the stock. That means there's a ton of alpha. That means everyone still doesn't understand the story. And there's a lot of ways to get some more momentum. But I asked her, how do you feel about getting 1%? And she was like, this is amazing, dude. I put in $1, I get 1%. It's awesome. So it's a really solid product offering. And I think a lot of people are going to care about it. Okay, let's get some updates on NVIDIA from Dan Niles. Let's see how he's thinking about it. Let me pull that up. We know he's pseudo bullish. He was bearish. Now he's being a little bit more bullish based on how he's thinking about NVIDIA. So let me see if I can pull him up and we'll see what he has to say on that as well. You taking the bricks to India? I should. When are your parents arranging a marriage for you in India? That's funny. That's very funny. That is not happening anytime soon. My mom wants to do an arranged marriage. My mom's not the traditional Indian woman, dude. She's a lot more creative, free-going, liberal. She's not that strict, She's really not strict at all. So I don't think she really cares about doing anything like that. All right, let's get an update on NVIDIA.
Comes down to more of the guidance in terms of how it reacts in the near term. I think, though, if you take a step back and you think about it from a longer term perspective, if you think back to the internet build out, and you can start that at the end of '94 when Netscape Navigator showed up, you had Cisco really drive the infrastructure build out for the internet at the time. Cisco never had a down quarter sequentially in 6 years. And the stock was up over 4,000% from the end of '94 to its peak, and revenues were up 15.5 times. If you look at NVIDIA, we're only 6 quarters, not 6 years, into the build out since we heard about this thing called ChatGPT and generative AI. And the revenues are up 4.5 times, not 15.5 times like it was for Cisco. And the stock is up 600%, not 4,000% like it was for Cisco from the end of '94 to its peak. So yeah, the stock may go down after they report because obviously we've heard about delays in Blackwell. Their 3 biggest customers, Microsoft, Amazon, and Google, all 3 of those stocks went down after they reported results. They all talked about, spending a lot.
S&P hits 560. 560 back on the S&P. That's important from a psychological perspective, but also a technical perspective. S&P right back at 560, up about 0.25% today.
Of money, maybe more than they needed to in the near term. So the quarter itself, it could be messy, but if you think about it from a long-term perspective, I think we still have several more years to go. I think the revenues will double over the course of the next several years, and I think the stock will as well.
So Dan, it sounds like you're still, or you would be a buyer here then at these levels.
I'm not a buyer here at these levels. I mean, if you look back at what we were saying, what we said going into this earnings season, we said we thought there would be an issue during earnings with the Magnificent Seven in that you'd have to start rationalizing AI spend because you weren't generating the revenues you needed. And so for us, if you look at the 6 Magnificent Seven stocks that have reported so far, they've been down on average 4% the day after earnings. So with this massive ramp up, you talked about it earlier, right? This will be the 9th day in a row the S&P's up. It's the longest streak since 2004. I wouldn't necessarily be pushing that into an NVIDIA print, but I think if you're not worried about what happens the day after, and you're thinking about this over a multi-year period of time, it should be in pretty good shape. But as we've seen, the market's really volatile. And when you've got big companies like Microsoft, Amazon, and Google, where the forward revenue numbers are coming down, not up after they reported, and they're the biggest customers for NVIDIA, and an NVIDIA chip is late, I wouldn't necessarily be messing around with it for the quarter itself. If you're thinking long-term, yes, you can be a buyer.
Dan, put this in perspective for our viewers, because so many people have talked about the fact that NVIDIA could be the next catalyst here for the markets. This is the thing to watch. When you stack up NVIDIA's results next week, compare that to what could come out of Jackson Hole here on Friday. What is the bigger catalyst to the market in your view?
Well, I mean, the long term is always made up of a series of short-term events. So I think you first get through Jackson Hole. I don't think it's hard to believe that Jackson Hole will be anything but positive in terms of rhetoric, because these central bankers, remember 2 weeks ago, you had the Nikkei down, which is the Japanese stock market, 12% in one day. The US stock market was down 3% in a day. And that's not that long ago. So they're going to want to be very calming and soothing and talk about the pace of rate cuts, not whether it will happen, and talk about the support that they're giving to markets. And so I think that's going to be positive. And then you obviously on August 28th, you get the NVIDIA results, and that specifically is going to focus in on where are we in this AI trade. Because I do think, sometime next year, you're going to go through a period of AI digestion once the Blackwell chips ship. Because you've heard different companies saying the risk is underspending right now on AI, not overspending, which tells you that they're spending more than what they think they need because their forward forecasts for revenues are going down. So at some point, you're going to go through this digestion phase. And for the viewers who don't remember these same customers caused NVIDIA to pre-announce negatively in the early part of 2022 because these same customers were going through a digestion phase at that time as well. So this isn't going to be straight up and to the right. I mean, even with Cisco, that stock was down 38% intra-year in 1997 from peak to trough. It was down 37% in 1998, peak to trough. It was up each of those years in full, but you had some horrific drawdowns as you were going through digestion periods or other macro events. And so you should be willing to deal with that in NVIDIA and expect that to happen.
So what does that mean in terms of investment?
S&P is green, folks. We are still green. Yeah, man. I mean, it's not bad. It's so funny. When I was typing my tweet, I realized you guys were upset when I was typing like the reason the market doesn't care because the market was collapsing. So when I was typing my tweet about why the market, I haven't posted it yet. I'm about to post it right now. Why the market doesn't care about this report. We were at 562 and this was the red candle where I was typing my tweet. And a lot of you were like, no, it's the wrong tweet because, markets are going to go red. Like, you can't say that. But this just feels like a normal sell-off. Like, this would not be a reason to get upset about that jobs data or think that the initial reaction wasn't the initial reaction. Like, this looks like such a technical sell-off, an algo-driven sell-off, given where, as you can see, the recovery is happening right there. I don't know if we get back to 562, but I don't think we end red unless the FOMC minutes are just horrible. So it seems like that red candle, which I can understand why it's concerning because it definitely feels like it's heading down below. You get a nice little bottom right at 558.55, which was down about 0.1% of the day. And then boom, you're green. You're green. It's not bad, dude. Maybe I'm being too optimistic and the rest of the day sucks. But I think if the market really gave a shit, like they really cared about that jobs data, and when I mean really cared, I don't mean 562 to 558 technical sell-off from of a intraday top. That's not caring to me. If they really care, we would not be anywhere near 560 on the S&P right now. Like it's been 30 minutes since the numbers came out. You would have had the market start to feel a bit scared. Robin is trying to make its way back to $20. Nvidia's green at 128. Tesla's at 221. Amazon at 179. PayPal is red, but PayPal was red already during the day. AMD at 157. Like the NASDAQ, bro. The freaking NASDAQ's up 1/3%. Like this tech should not be up right now if that number cared so much. I think the market essentially told us, hey, we care about it, but we priced it in. I think it's not that we don't care. It's that we care, but we priced it in. And because we priced it in, that's why it seems like it doesn't care. Why do you think the market doesn't care? It dropped down a lot after bad job results a week ago. Yeah, but so on August 3rd or August 2nd, the job report we got, that was different from this. This was unemployment. That was not a revision. This was in the month of, I think, July. And that was way higher than expected. I'm forgetting the exact numbers, but I think it was upwards of tens of thousands of more than expected. Now, a lot of that was probably due to the hurricane. This is what Tom Lee's been talking about a lot. But in general, that was the first sign that the consumer is going to weaken spend because people don't have jobs. And then a couple of weeks later, we get revisions from jobless claims and payroll reports. And we'll get another one, I think, on tomorrow at 10 a.m. That actually, like that 1 month July number that was reported on August 2nd, that was kind of a fluke. Or at least that's how the market thinks of it. Maybe it's not a fluke. We'll see more data over the next coming months. But it seems like that August 2nd one was a fluke, which means if that one was a fluke, which caused a downturn of 10% along with the Japanese carry trade happening basically at the exact same time. That's why we had such an amazing buying opportunity on August 5th. If that's already been priced in along with the revision of jobs, that's where the market's like, hey, we think earnings growth is still strong enough. At the end of the day, the S&P needs earnings growth to justify multiple expansion. And right now we're pricing in $260 a share in fiscal year 2025, which is enough for the market to expand even closer to 5,700 by the end of the year, in my opinion. Now, look, we're already at 560. We have 4 months left. I don't know how much more room we go higher. I do think there's a shot. 5,800 is on the table. 6,000 would be a crazy melt up. Robin it in 1994. But it just seems like the market does not care that much because they believe earnings growth is gonna take things further. Okay, let's finish what Dan Niles had to say, then we'll move on.
Investor positioning, Dan, I get it that you are kind of bearish short-term, bullish long-term on NVIDIA. What portfolio management does that initiate for investors listening in terms of capital allocation there?
Well, I think one of the things that we've done is we've broadened out what we own. So if you're in an environment where rates are getting cut, I always look at it and say, what can I do where I benefit from the big macro trends? Well, the one thing you know pretty much for certain is that rates are going to come down across the board. So what companies will that benefit? Well, financials is one sector. Consumer staples, obviously with the big dividend yields that they have, is another sector. Telecom services is another sector where you've got big dividend yields, and those look a lot more attractive when rates start to drop. And so I think, right now it's been tech 24/7, AI all the time, but don't forget that trade is getting a little longer in the tooth in the sense that if the biggest companies in the world, like an Amazon, like a Google, like a Microsoft, all which are big AI players, had their forward revenues for the September quarter cut when they reported June, despite all the benefits from AI, then you may want to think about, because over the long term, earnings is what drives stock prices. You may want to think about other sectors that have been just sort of left in the dust, the other 493 stocks in the S&P 500, because those are going to benefit in a rate cutting environment with an economy that is slowing, which is what's going on right now.
So Dan Niles still bullish at the end of the day on the economy, even though he thinks we're going to have more volatility. Kind of the same point a lot of analysts have made as well. Let's listen to Josh Brown real quick on PayPal as well, get his perspective there, and then we'll keep going.
Like, as you know, when the fundamental news lines up with what we're seeing in the technicals, and PayPal hit our list at the end of last week of the best stocks in the market. Technically speaking, this stock is now above its prior 52-week high, and it's been a really long time since there's been anything positive to say about PayPal. And I have lost money in this name before, so think twice before you follow me into it. But they have a new CEO, and the new CEO is making incremental moves to improve the fundamentals. We've seen that in the last couple of quarters. And now we're starting to see big partnerships. And I think that's why the stock has been breaking out. The other thing to keep in mind is Apple. And Apple, by the way, is the bête noire of this story. Apple Pay has just absolutely trounced a lot of competitors on wallets and payments. Apple has just preemptively opened up its near-field communications, or NFC, system so that you can tap to pay, and this will include Venmo. So having Venmo as an option alongside Apple Pay when you push your phone up against a merchant screen is something new. The axe on this stock is Dan Dolev at Mizuho. He went positive on the stock after having been negative for a while, and the story here is now changing. PayPal is, I think PayPal has a very hot product in Fastlane, and if they can gain back some more ground on all these payment solutions, it really changes the fundamental outlook. So it's a technical breakout. I have a relatively tight stop. I don't trust this name, but I'm in it, and I love it when the fundamental story is improving as price action is confirming.
Carrie, this thing was in no man's land, penalty box for a long time. You used to own it, didn't you?
As a matter of fact, I remember the last time that Josh bought it because we had sold it.
Yeah.
And I wish Josh luck. I mean, there's a lot that could go right, but yeah, I do.
That's so funny, dude. When you're like, well, I remember because I sold it to the noob who was buying it. That's like such a intellectual insult to give to someone in the stock market.
I remember. I think if the market holds up, if retail holds up, it's good for PayPal. That's what it needs. It needs not just partnerships. It needs people to keep spending on their platform.
Yeah. So, Steph, with all this news about Buffett selling Bank of America, selling the stake down, you've been a buyer and you're a believer in financials. Do you think there's momentum in that sector moving forward here with all that lies ahead?
First and foremost, Buffett is still a 12% owner of Bank of America, right? That's number one. Number two, earnings. To the point of view, you guys were talking about broadening out in the market. Financials grew earnings 17%. And by the way, discretionary, 31%. Healthcare, 17%. So there's no wonder why we are seeing this broadening out, right? I mean, that's the whole point, is that earnings are doing better than expected. I don't care, you talked about 5% revenue growth for the overall S&P, and that wasn't great, but I'll take 5%. That's about a 2.5% GDP world translation, and you're seeing margin expansion, which is why you got 10% earnings growth. So to me, that's the exciting part. That's why we're seeing the broadening out. Back to B of A, it's trading at 1.5 times tangible book. I think it can get to 1.9 times because net interest income is 50% of their revenues, and with interest rates coming down and them repricing their bond book, I think you're going to see something like $63 billion in net interest income by 2026, net interest margin expansion as well, fees coming back because the last decade they got hurt because they reduced their mortgage book. So that goes away, and they're seeing investment banking fees at the same time. Expenses are growing GDP kind of plus or minus 1%. I think you add it all up, it's a very cheap stock. So I like it. I'm overweight financials, and I've been very pleased with the rally in the sector.
So
and financials have done very well. PayPal has been a laggard in financials, but it's going to be important to see, how financials. S&P still holding 560, bro, still holding it. It's going to be important to see how they perform when we get a rate cut. So someone asking a question right here: how does rates coming down affect their net interest income? So the thing about it's interesting. For some financials, like a SoFi that's doing lending and a regular bank, that helps them because they can loan out money at cheaper rates. Now, the problem is with a lot of the legacy banks, they loaned out money at 2%. Fed's funds rate is at 5.5%. So that delta is what they're underwater on. So as soon as you lower rates, the paper losses, I think Bank of America has like $80 billion of paper losses. That starts to turn into like 75 billion and then 70 billion. Then over time, every 25 basis points, they get some depreciation on the massive losses that they have, which increases their tangible book value. So it's a good thing for financials. For a company like Robinhood, for example, their net interest revenues can definitely go down if you lower the interest rates, and they even confirmed that to us, because they can't give people the types of APY, and this is true with other financial companies like SoFi, because you can't give someone 5.5% if the Fed's fund rate is at like 5%, right? Then you're losing too much on the spread. Now, granted, they said, hey, because we're a brokerage that is vertically integrated around trading and net interest revenues, even if people even if we're not collecting a yield on net interest revenues that's as high as it was before, trading activity will overcompensate for that, and the transaction revenues will allow us to be good on that. Some companies don't have multiple levers they can pull, right? To activate one thing if the other thing goes down. But that is, in general, what the market's going to be looking for if you're a business that has been reliant on your net interest revenues, which most banks, I think, like a majority of their revenue ends up being net interest revenues, to be able to figure it out. So overall, the banks are going to do great when we get rate cuts. The regionals are going to do great. And by the way, they've already done great. I mean, if you look at KRE, the regional banking ETF, that one in the past 6 months, look at that. It was at 45. It topped out at 60, now at 54. Same thing with XLF, which is heavy financials. This was at 39, topped out at 44. Now it's at 43.6. Like, I think the financial run has been priced in. I think it will expand, but I don't know if it's going to expand as dramatic as some of these other things that can run. The only thing that hasn't really been priced into me is small caps. And if Tom Lee's right on his thesis, I think that one really runs when we get rate cuts. But financials have run. Net interest revenues are not going to be hurt that badly, and tangible book values are going to go up when we lower rates, which is very, very important for companies that are in banks. It's also good for America. Like, a bank needs to loan out money. They don't want to lose money on the money they loan out. So when rates come down, it's easier for them to loan money. It's just easier for capital to start flowing in the broader markets. Amit, what are your thoughts on leveraged ETFs like NVDL, 2X, NVIDIA? I agree with Jason and what he said yesterday. I think these are swing trades, not investments, because at the end of the day, they're very volatile, right? And you have to, unless you're super, super, super long one name, maybe you can justify having, being long a leveraged ETF like this because it creates more leverage and more alpha. But I think they're best as trades and swing trades. Like, if you think NVIDIA is going to crush earnings and you want to get more exposure, then you buy some NVDL or buy some calls on NVDL going into earnings. I just think the volatility on them is a little too intense. And at the end of the day, it's not the actual stock. I'd rather just have more shares of the underlying stock, but it's a great trading vehicle. TSLL, another one. And if you're wheeling, like, TJ sells a lot of options on TSLL, because instead of having to pay $200 in collateral for a Tesla share, you can pay $10 with TSLL. Now, it's still more volatile, but that makes the premiums even better. And if you're somewhat correct on the directionality of the stock, which if you're trading a leveraged ETF, you should at least kind of understand the stock you're trading it on, then you should be able to collect a decent amount of premiums to the upside or the downside based on the leverage ETF. So I like them, but I think they're more trades versus just investments. Fed minutes are at 2 p.m. I don't know if that really changes the results we got today, guys. I mean, I saw some people on Twitter just now. I was scrolling Twitter while the video was playing, and some people were reacting to the 562 down to the 559. And even they were like, dude, this is not, this is just like, this is a technical sell-off. You tend to have that pretty much every day we have good data. But when it's down 200 basis points, not 25 basis points, then we can start seeing some downside effects on the market. This is nothing, dude. This is basically a flat day, if not ends the day green. At least it's green right now. And it's the market saying, we don't care that we lost 818,000 jobs. Robinhood is trying to get to $20 right now, 1996. Robinhood dipped to 1969. Now right back trying to get to 20. And then Palantir as well, 32.19, really not that far off from where it started during the day at 32.40. So overall, things okay. Amit, what do you think? Palantir holding 32 for a couple of days, can't break 32.50. I think it's not a good sign that we're not breaking 32.50. It's a good sign we're closing above 32. It's not a good sign we're not breaking above 32.50. So if we don't break that in the next couple of days, if not by next week, I do think we probably go, break down into the 31s and 30s. But I don't think that's a bad thing. Like, again, like, as bullish as I am, I don't think it's bad for us to consolidate from 27 to 32. I think that's very reasonable. That's very healthy. I think a lot of people would be freaking out if Palantir was 35 right now because it would be way too quick, way too fast, especially given the valuation. So to me now it's kind of, now we analyze the news on Palantir, but it's kind of boring in terms of the stock unless we get another run on a rate cut. But I think 27 to 32 is the zone for the rest of the year. Now I do think 35 is possible if we get a melt up. So I think 35 is my bull case for the end of the year. And I think that if Q3 they report, 32% top line growth and margins go to 40% on free cash flow, you could really see a big push. But I don't think the market needs to give us that much more given how much they've done so far this year. We did touch 31.11, by the way, in the pre-markets a couple of days ago, but that was very, very quick. I think it was after hours. Where's Hood? Hood at 1997. Let me check the resistance on 20 for Hood. Let's see that. Robin Hood, $20. No, there's no resistance, dude. There's 5,000 shares. There's nothing. If we break through, we should be able to hold 20. We just got to break through. Nothing too crazy there. Bro, why are you live? The market open was 2 hours ago. AJ, I don't know if you saw, but our amazing government decided that they would release the jobs data 45 minutes late. And then the market didn't care, dude. Dude, the Bears must be so mad, bro. The Bears must be so mad. They must be so pissed at this. They must be so pissed. The S&P's not at 562 where it was right when the news came, but the S&P's not red. The market's not red. And I think every bear wanted to see the market get really upset, be blindsided by this 1 million jobs, 818,000 that came out of nowhere. That's not real. Unemployment should go up. Consumer should go down. You start forming all these narratives. The market doesn't give a fuck. They do not care. I am the Bears and this job number was bad. All right, so then tell me why. No, I'm curious. Why is the market not reacting to it if the jobs number was bad? I agree with you, though. The jobs number is bad. I agree. 100% agree. But why aren't we down 2 or 3% on the S&P? Or why is the NASDAQ down? This is a big question. I mean, at some level, I think as bad as the jobs numbers was, it was priced in. And I think that is, I think that's very telling based on how the market's reacting to it. Now, this doesn't mean obviously we can't see downside momentum, right? We're playing close to all-time highs. I wouldn't be surprised if we end the week red on Friday, given how good of a week we've had or good of a 2 weeks we've had. But at least on today's news, it's been an hour now. The market has had time to digest this. This was not a report that the market felt was bad. And this happened with CPI as well. Market really was flat on CPI, but it wasn't down. I don't care if we're flat. I just don't want us to be down 2-3% because then you've got the rumblings of a dead cat bounce that start forming over the past 4 weeks. And look, if this was a 4-week dead cat bounce, it was one of the best dead cat bounces in history. But I don't think it was a 4-week dead cat bounce. I just don't feel like that. Because there is no sell volume? Well, maybe because no one's selling. Right? Maybe because no one's fucking selling, dude. Maybe that's why. There's no sell volume because people aren't selling. Or at least that would be at least my argument there. Someone says zoom out to what? We're on the monthly right here. You want to zoom out to the yearly? How far do you want to zoom out? The yearly, it does look crazy, dude, right? 405 we started in October. Then came all the way up to 521, went down to 492. This was when Iran-Israel was getting bad. Went up to 565. Japan said, hey, it's time to go down to 507. Now we're right back at 560. Wait and see is not bullish. I disagree, AJ. I don't think you have an argument here, man. I really don't. And it's not just you, but I'm open to, I came in today being bearish. I came in with money ready to buy, dude. I legit was ready. I felt this would be a bad number. So I was wrong in the beginning of the day. It's just as soon as I got that number and the market didn't react for a good 20 minutes, it made it feel like, all right, so it was priced in. So I agree with you. 818 sucks. It's just not enough for the market to care. Now, if this was like 1.2, 1.3, 1.4 million, maybe that would have put a dent. But 818 was not the number. Doesn't Kendall Jenner have a tequila brand called 818? Doesn't she have a brand called 818 Tequila? You think she paid the Fed to put that number out there to subconsciously get us to think about her tequila brand? Because it worked if she did that. Maybe that's why the Fed was late on reporting these numbers, dude. Maybe the BLS was striking a deal with Kendall Jenner. The number was 817, and she was like, I'll give you guys $1 million to just make it 818 so you can market my brand. That's a bit of a stretch, but nonetheless, the point is we got a 45-minute delay, and the market just does not care. The market does not care. And again, here's the thing about this. I tend to, I think I'm pretty. So here's the thing about how I think of my perspective on being bull and bearish. I tend to not poke the bears ever, really, and I tend not to try to poke the bulls either. Like when things are going really good, I tend not to be like, haha, all the bears are wrong. I try to analyze the bear case, and I think we do a pretty good job on the show, really looking at every single bear case. Because I've got a lot of money in the market too, dude. If there's a legit bear case, I'll get the fuck out of the markets. Like I'm not opposed, at least in my options, my equities or whatever. But I think we've given a lot of airtime to every single bear that has had a legit argument over the past year, and unfortunately, none of those arguments have culminated into a catastrophic collapse. And this jobs number is the same thing, dude. We talked about why the jobs number really doesn't matter when you look at future growth. And if the bears still want to complain about it, you can complain about it, but you're complaining to thin air because the market disagrees. The market just does not care. It doesn't poke bears, they poke him. But I don't know, dude. I don't even think this is emotional either, dude. This is looking at real fucking data. We're looking at every single company, how they're talking about earnings. This was the post I posted on Twitter about this to kind of summarize this. I really don't think it's emotional at all. I mean, again, 818,000 jobs doesn't raise the unemployment rate. Losing 818,000 jobs makes a rate cut more likely. If you're in the camp that a rate cut is bearish, then okay, we just disagree. Like we just have a fundamental disagreement right there, and we're just not going to agree. That is what it is. We're on two different sides of the aisle there. But I think a rate cut is relatively bullish, especially because I don't think it's as reactionary. And then 3, we've got real companies guiding higher for Q3. So if you lose 1 million jobs, but all those companies report higher, you've got to factor in Q4's growth going down significantly from Q3's growth to be able to say that we need to sell off these stocks right now because in the next 8 months, they're going to be lower than they are right now. I think the market digested the number and it priced it in many days ago, and that's why we barely got any downside momentum here today. The job numbers matter. It was just priced in. Yeah, I agree. The jobs numbers matter, and it was just priced in. Priced in before the print. Yeah. Seems so, dude. It seems so. I am not a bear. You can be net long and still understand the need to hedge here. Oh, 100%, dude. If you bought like puts going in, I don't think that's a bad thing at all. I think that's totally fine. If you bought calls on short QQQ, like I agree with that. Like that's totally normal. And if you lose the money on the hedge, it's fine because theoretically that's the point of the hedge, right? The market should go up enough for the gains on the long positions to overcompensate for the losses on the hedge. But if you just went straight bearish, short the market, like completely get out of everything because of a jobs number report, I don't know. It just feels like you're not looking. It feels like people who did that are not looking at a lot of other pieces of data. I mean, for goodness sake, we had Japan crash worse than 1987, and we recovered 2 weeks later. Now, if you want to say, oh, well, that recovery is fake, I guess you're not looking at what the Bank of Japan is saying. And what the Bank of Japan is saying is that, hey, we are not going to raise rates, so you don't have to worry about USD to JPY collapsing, which is overall bullish for U.S. equities. Now, maybe that catches up to us a couple years from now, but in the next 6 to 12 months, it doesn't seem like that's going to have the biggest concern because it already unwound. And we look at the data from the hedge funds, right? Their net shorts went down from 15 billion to 1 billion. Like there's all these pieces of data that you just can't ignore if you're bearish, right? If the hedge funds aren't short the yen anymore, there's no carry yen trade to unwind. So like if you just ignore that piece of data, then it's like, okay, but that data is something that I don't think you can ignore. Can we take a moment to acknowledge Amit's loss of weight from fat ass to sexy ass in 3 months? I have been losing some weight, dude. You guys know I've been in the gym. I have been losing it, but I don't even think I'm getting started on my weight loss, dude. Like I think by end of September, like it's gonna be October 2023. And if you remember October 2023, it was skinny, bro. It was skinny. Right now, I wouldn't say I'm overweight, but I put on some weight. And it has been coming off over the past couple of weeks. The gym has been going well, but we need to get that sucker back down to skinny because I like being skinny, dude. Like I've naturally been skinny my whole life. I like being skinny. I don't like being a little big. And right now I'm a little too big, I would say. So I got to get back to being skinny. But in general, again, my goal is not to poke the bears. My goal is to give a lot of respect to bears, because when shit hits the fan, like August 5th, everyone is listening to the bear case, right? And we've all been through that with COVID in 2022. We've lived through that. So I think it is unhealthy to not give the bears a decent amount of respect and appreciation, because you always need to hear the opposite case. I mean, we give the bears case for Palantir all the time, right? Like, that's important to do. Palantir Weekly, we talk about a bear case every single week, right? We try to really find bear cases. But if so much data is going against you, bearish or bullish, at some point you have to like see that maybe the thesis might not be in the best spot. Amid, how does it feel that 1.3 thousand people are listening to you right now in 3 hours of streaming? That will have been 4,000 hours of people's lives spent listening to what you think. It really, I don't think about that too much anymore. For those that have been part of the channel, like even Derek texted me today. Derek, I think Derek was in the stream in the morning. He was like, dude, there's like 2,000 people watching. The thing about this, dude, is like I was here when there were legit 40 people, dude. If you guys watch some of my streams from July of 2023, there was legit 40 people. And the energy that I have when there's 2.5 thousand or 40, it's really not that different. Like if you watch some of those streams, dude, this is back in like June of 2022. It's the same like 2-hour stream, answering questions, talking about the stock market, because I'm so appreciative of anyone who joins. So to me, whether the number is, 40, 400, 4,000, it's just performing and putting on a show. Now, granted, when I say some jokes in front of 2,500 people and I realized that maybe those weren't the best jokes and no one actually laughed and they were laughing at me, not with me. Yeah, I feel like, maybe I should have altered the punchline a little bit, because 4,000 fucking people were listening to that. But at the end, like, do you guys remember on Palantir Weekly, dude? I said, I think that's the day I was wearing the Kobe jersey, and so you could see my arms. This was Q4 in February. There was 6,500 people. And I made the same stupid joke I make about Palantir being a defense contractor, but I'm the one who has the guns. And I said that. And then Arnie started talking. I was like, did I just say that in front of 6,000 people? All right, I guess I did. Fuck it. I did. It is what it is. So sometimes you got to just do what you got to do. Yeah, AJ was there. Bay Ray says I was all 40 of them. Bay Ray was there. No, dude, it's fun, bro. It's fun. Like, this is the coolest thing in the world. I love doing this. I'm excited every morning to do it. Even if I'm a little tired, I didn't get enough sleep. Like, this is what I love to do. I love to communicate. I love to present ideas. I love to hopefully do it with enough emotion. I love to do it in an objective way. I was listening back to how I talked about the Kamala tax rates yesterday. This is stuff like you guys asked, do I listen back to the stream? Like, I wanted to listen, like, hey, was I sounding way too biased against her or bullish for her? And I listened to it and I was like, look, there is some bias, because obviously I'm not a fan of that corporate tax rate, but I think I did a decent job presenting other sides. Because I know when you have 2,000 people, dude, at the end of the day, even though a majority of you don't like her, I don't want to isolate everybody, or isolate even 400 or 500 people. Like, that's not something a content creator wants to do. I have my own opinions, obviously, and I'll, be vocal about those opinions. Like, I really like Robinhood. I like Palantir. I don't like Netflix. But I think those are generic disagreements that people can come to a easy understanding of. When you get into politics or religion or any of that stuff, it gets a little bit too intense. So I think part of growing the show is trying to present objective data, trying to be entertaining while also informative, and also being funny. And the last part we've got down pretty well packed. So I don't worry about that one at all. You lost 2,000 viewers right there with that joke. Yeah, pretty much. All right, 55.59 on the S&P. What else do we have moving in the markets? I don't think anything else is changing, bro. We're still green for the day. Again, 2 p.m. is when we'll get the the Fed FOMC minutes. I don't think there's anything too crazy. Let me see if there's any other headlines. The big headline of the day was that jobs report, and that jobs report is fully priced in now, and now we're moving on to the FOMC minutes. Let me see if there's any other headlines right here. Let's pull this up. Nothing too crazy. We talked about Apple yesterday. They had some interesting things. CrowdStrike, nothing there. 818,000 jobs. Yeah, that's pretty much it, dude. Target's still up 14%. That's pretty much it. That's pretty much it. VibeUp says, I tried to get my girlfriend into the stock market trading. She just wasn't interested. Then I played your stream every day, and your way of storytelling got her interested. Now she is a star at trading. Wow. That's cool. See, that's awesome. That's how it's supposed to be, dude. I like that because if the stream hopefully can, you're not alone with that story, Vibe Bob. Other people have told me that their girlfriend or their wife listens in the background and they tend to like care a little bit more about the stream. That's good because girls typically just don't care that much about the stock market. Like women are just not that interested in it. And I know there's a lot of women in the chat that are like awesome at trading stocks and they care about it, but they're in the minority. Lots of women just do not. Like I try to talk to some of my friends who are girls about it. They don't give a fuck, dude. Like they do not care. They could care less. I mean, my sister's the perfect example, dude. My sister doesn't give a shit. I tried to, like, dude, my sister is up a decent amount of money. I bought her a lot of Robinhood at 16, 17. And I'm like, hey, you see this? And she's like, yeah, that's cool. Like, she doesn't care, dude. She has a bunch of Palantir at $21. I think her average is like 1980. I bought her a lot of shares in Q1 when that shit fell 20%. She doesn't care. She doesn't care. So it's nice to know that women care a lot more. And then what do you think of HIMS moat arriving via personalized healthcare data of clients? Again, I like HIMS, dude. I'm not super bullish on it, but I do think the valuation and the growth, they're growing at like 70% year over year. It's crazy growth. Topped out at 25. It fell after that lawsuit thing that happened. Probably a stupid reason for it to fall. Bottomed at 14. Now it's 16. It's up like 3x over the past year. I think the growth is great. It's profitable and they're attacking GLP-1. So I don't see a super bad reason to not own it. I'm just not super into it, which is why I don't have it. But I definitely think they have a moat, and I think they understand e-commerce a lot better than most of the other companies in healthcare. Toby says we're going to get the minutes lean towards the cut, then we run. Minutes stay stubborn, bearish, then the market fears a recession. Yeah, if the minutes lean toward a cut at 2 p.m., which we'll get in 2 hours, we'll talk about that on the market close, we should get some momentum. If the minutes stay stubborn, the market might fear a recession. But again, even if the minutes are stubborn, if we couldn't get 818,000 jobs to get us to go red, I wonder if because here's the thing, dude, the minutes are on the last FOMC meeting. Even if they were kind of hawkish about a rate cut, does anyone in America, anyone on this planet not believe we're getting a rate cut in September? I think it is absolutely priced in at least 25 bips. I think the market will still be happy when we get a rate cut because it'll probably signal that we're in a rate cutting cycle. So they'll start pricing in 50 and then 75. And like, I don't think the S&P is 560 right now or 559 if the 25 basis cut is not priced in. So I think that's priced in already. I just think when they announce it, the market will easily price in more. But I think like for anyone who thinks that it's not happening in September, I'll go out on a limb and I'm saying like it's happening. It is absolutely happening. And so whatever the Fed FOMC minutes are, this labor market data makes it almost definitive that it's happening. 818,000 jobs. Are you kidding me? We're definitely going to start to stimulate a bit more along with CPI being under 3%. So for anyone who thinks it's not happening or if the FOMC minutes sound kind of hawkish, again, that would be a buy the dip to me. Like that's why I felt, okay, if we get bad job data, I'm going to buy the dip because I know what's coming. If we get bad FOMC market minutes, I'm going to buy the dip because we know what's coming. These are all buying opportunities. These are not like scary opportunities. The scary opportunity was August 5th. And that ended up being an opportunity, not necessarily just that scary. Eat mayo if it doesn't. So I was considering doing my promise of eating a bucket of mayo. I'm confident. I'm just not that confident, dude, because if there's any chance in hell J-Pow screws us, like really screws us, I can't do the mayo, bro. Like I could barely eat the fucking mayo with shrimp yesterday. By the way, someone texted me this today and tell me, I'm going to show you guys this. Tell me if this is not the most disgusting thing you have seen on planet Earth. They were fucking with me, and so they sent me this. Does anyone think they can consume this? This is tuna with mayo. Does anyone legit think? Does anyone actually think, oh my God, this looks great, I want to eat? Like, does anyone like look at this, dude? Does anyone look at that and be like, you know what? I need some tuna and mayo. First of all, who the hell eats raw tuna and mayo? That's disgusting. At least make it into a sandwich. Second of all, who eats it in a plastic plate like that with a spoon like that? Like, and then who puts that much mayo, bro? This is so much mayo. Like, I'm gonna throw up looking at this. This is disgusting. And yes, it was Bayray who sent me this picture. Just absolutely disgusting. He stirs it up, dude. That's too much. I don't. So as much as I'm confident we're gonna get a rate cut, I can't promise to do the bucket of mayo. I just can't do it. I just can't do it, dude. It looks disgusting, right? It has to. Tuna mayo is a thing. No, I know it's a thing. I know people eat it. I'm surprised he put that much mayo on it, and he actually indulged. Like who gets a plate, gets a spoon, gets a bunch of tuna, gets a crap ton of mayo and mixes it together and like, hey, this is my dinner. Like, what, bro? What? Dude, I would have to be starving. I would have to my stomach would have to be turning inside out for me to even think of doing that. No way, bro. No fucking way. Oh boy, see, Ramu says that's disgusting. Thank you. We have someone who agrees with me. Also, he has no onions, no vegetables. Like, at least put something else in there, dude. It's just mayo and like you got to put something to make it better. But regardless, dude, I think we're getting a rate cut. I think it's happening, and I think the market's reaction is appropriate for that. So we'll see at 2 p.m. what ends up happening with these minutes, but I don't think it'll be that big of an impact either. That's not tuna with mayo. It's mayo with tuna. Facts. That is literally mayo with tuna, bro. That is not tuna with mayo. All right, so after the bell today, we will have Zoom, Snowflake, the discussion on the minutes. I don't think the minutes are going to be that big of a deal, but we'll see in a couple hours. And then Snowflake. I think Snowflake's going to crush it just because I think they've been sold off so much. If Snowflake actually sells off, then that's really bad for Snowflake. I think Snowflake gets a bid after earnings, and they'll show a little bit of accelerating growth. And then Zoom, Kathy Wood's been selling all over Zoom. So she's been the biggest shareholder. She's basically selling 100,000 shares every other day. So I don't think Zoom's been growing 1% every quarter. They're probably not going to grow that much more from there. So those are the two earnings that matter. And then we'll see what the Fed says. And that's pretty much it today. But look, this is a good day. This is a good day if you're bullish in the market to get that type of a number, even though it was delayed by 45 minutes, and to not have the market realistically react to it to the downside. That's a big deal. That's a really big deal. So not bad at all. Don't knock it till you try it, dude. No, it looks disgusting. It just looks disgusting. It just looks disgusting, bro. Amit, you think SoFi pumps after the meeting today? No, I don't think anything pumps after the meeting. The pump should have been on the jobs report being worse than expected. The jobs report, you could argue, was worse than expected because 818 is less than 1 million, but it was still pretty bad. I think if we were going to get a pump today, that was it. I think the Fed minutes, if any one of the Fed presidents says, hey, 50 should be in September, which is maybe why Evercore said 50 in September. Remember Evercore a couple of days ago, they were like, hey, we think we're going to get 50 bips from Jerome Powell. Maybe Evercore got a hold of the minutes or talked to someone who knew about the minutes, and that's why they said that report. If we get that type of report in the minutes, maybe that pumps SoFi and pumps the broader market. But now I'm expecting the market to be flat after we get those minutes because I don't think it's pricing in anything that the market didn't know. So we'll see in the next couple hours. All right, that's it for me, folks. I'm going to go to the gym, keep working on developing my assets as a defense contractor, if you know what I'm talking about. Because the guns, okay. Anyway, I made that joke too many times. I haven't made the ARPU joke in a long time, though. I need to get a new batch of jokes and deploy them because I've been deploying the same jokes for like a year now. But I'll be back at 3:45. We'll see Snowflake earnings. That'll be a big one. If you guys want, we can listen to the Snowflake earnings call. I'm not opposed to that. I'm actually curious kind of how they're navigating everything, and it will give some insights into Palantir and SaaS. So maybe we listen to that. I think that's probably gonna be at like 5 o'clock, and then we'll keep going from there. All right. Thank you, everybody. Hope you had a good day. Let's see what happens till the rest of the day at 3:45 when we get these minutes. And then we'll see what happens in the context of earnings. Oh, word of the day. That's a good one. I forgot of word of the day. Word of the day. I'm definitely not going to say this shit right. What is this? This word is crazy. Clepsydra?
Clepsydra.
Okay, not too bad. An ancient device for measuring time by the regulated flow of water or mercury through a small aperture. Okay, let's look at what this looks like. Clepsydra. I feel like I've seen it. Has anyone seen this before? I feel like I've seen this before in like a textbook. A water clock. Huh. Well, the clock was ticking today as we didn't get this report for 45 minutes for jobs, but Clepsydra. Interesting. All right. Well, if anyone owns one of these, then let me know. But yeah, there's a real life one right there. I feel like I've seen this in a textbook, dude, from like 5th grade. This is giving me memories, but I didn't know this was like a real thing. All right. That's the word of the day. That's it. Thank you, everybody. And I will see you back at 3:45 p.m. p.m. Bye, everyone. Have a good one.